Good morning, everybody. Yeah, good morning, guys. So we'll start off with our law marathon for November 23 exams. CA Inter Law. Just writing it over here. Let's start off, everybody watching online, live, recording, and offline. Let me first give you the agenda of what we are going to do today. Everyone knows we have Companies Act for 60 marks and other laws for 40 marks. Today's agenda is going to be like covering all the key provisions, but I will run through all the provisions, full Companies Act and full other laws. We'll keep going till the end. Okay. So we can start off without wasting much time. I want it to be interactive from you guys who are here. I will be using a lot of section numbers so that it's easy for you to find the answers. If you know section numbers, well and good. If you don't know section numbers, it's okay. Ignore the section number, focus on the concept. Focus on the concept, focus on the provision. I'm going to keep this purely only exam oriented. No concepts, no provision like why we are doing this, why we are doing that. No, only exam oriented. That's what our focus is. And if you put little effort during the class today, just in this video, by the end of the video, at least 25 to 30 sections you can learn. You can easily learn 25 to 30 sections if you put some effort. Little effort you need, because I will teach you section numbers like a story. There are stories that we have. There are many stories which will help you remember section numbers, but I will do it in the course of it, because some important section numbers which we can definitely tell it will come in exam. If you learn 25 to 30 section numbers, from that some 20 marks will come, 20 to 30 marks. And if you remember those section numbers, it makes sense. So that is something I will try to put effort today. It's easy to learn, but otherwise we can get going. We'll start. Those who are watching online YouTube, it will be hard for you to ask doubts. It's just going to be a continuous live stream. Here, offline students, of course, can ask doubts here and there, or in the break time we'll have doubts. So we can start off, guys. I'm going to start in the same order from section 1 to section 148. Then middle I'll shift, go to some other chapter, again come back. So let's go in order itself, guys. Section 1 is title of the Companies Act, not important for exam. Next, let's go to section 2, definitions. One key definition is 2 subsection 85, which talks about small company. Small company, all I have to remember for exam is the limit. We have limit paid up share capital and turnover. Paid up share capital is up to 4 crores, turnover is up to 40 crores, and then this 40 crores can extend up to 100 crores, 4 crores can extend up to, the simple rule is current limit is 4 crores, 40 crores, future it can become 10 and 100 crores. All limits put together, we have only 15 limits in the syllabus. That's it. Only 15 limits, and majority of these limits come in a chapter called Books of Accounts, which we will see today. And if you remember these limits, one question guarantee in exam, every time one question comes. Okay, this is 2 subsection 85. I will be using the material for procedures. Then there are other definition sections, not that important. We have 2 subsection 40 financial statements, not that important. Proceeding further, section 3 talks about minimum number of members. Very easy. Minimum number of members. Private company is 2, public is 7, maximum is unlimited, maximum is 200. That's it. Since we spoke maximum is 200, for a private company, the 200, what is included, what is excluded? Sometimes they ask us a 4-5 mark question. Following only is excluded. For counting 200, students make mistake here by writing the following are not included in members. It's not like that. It is, they are members but not counted for the purpose of 200. Joint shareholders are counted as 1. Employees who receive the shares during employment are excluded. Past employees are excluded. This is section 3. Then 3A is an important section where the minimum number of members falls below this. If it falls, then the liability becomes unlimited if you don't rectify within 6 months. That is 3A. Then 4 is MOA, 5 is AOA. We always get confused which overrides what, MOA or AOA. which overrides what? MOA overrides AOA, but something overrides both of that. Act, section 6 Act overrides both. In the latest exam, they asked this for a 6-mark question. In May 23, this came for 6-mark question, that what will override what? Act overrides both MOA, AOA, and the sections are lined up right next to it. You all know what are the clauses in MOA: name clause, object clause, registered office, situation clause, association clause. When I go to alteration of MOA, I will teach you that, but in simple, if you want to alter the MOA, you want to alter the powers of the company, so you have to pass a special resolution. Then let's proceed to section 7. Section 7 is basically when you incorporate a company, what are the documents I have to submit to ROC? Very simple. If I just have to brief this in simple points, what documents I have to submit? The documents you have to submit is basically MOA and AOA. Then you should also submit, it has to be the same has to be authenticated by CA, CS, CMA, and an advocate that everything has been followed properly. Then also the directors will give declaration for 3 things, which is important, that everything is true and fair. There is nobody involved in any kind of fraud relation to promotion, management, or formation of a company, and none of the directors are involved in any fraud or mainly breach of duty or misfeasance in the last 5 years. The top management is not, or any of the members who are signing are not involved in this. Then related to directors, we have to give details of their KYC, guys. Don't write KYC in exam. Basically their PAN card, proof of identity, all of that. And if these directors are directors in some other company, you have to give those details. Details in some other partnership firm, they are consent to act as directors. Imagine I just put your name. How will I say your director? Your consent and which other firm they are directors. That's it. This is the basic declaration. Once you file all of this, ROC will give us certificate of incorporation. Are you following, guys? I can run through all these points in the book also. Which one do you prefer? Book or writing on the board? No need points over here. Writing on the board. Everybody, hello? Okay, we'll go with that itself. Fine. Following is, that is section number 7, but so far never tested in foundation or inter exam. But I am not going to tell you it won't come here, but I am just telling you, in this discussion, I will also tell you which section is important for exam. November 23. If somebody is watching, I am talking about November 23, last whole syllabus. Which section is very important for exam? Which section, okay, you read but may not be that important. Are you following, guys? Clear? This has never been tested. Just run through. Next, section 8. Section 8 company. Key points. I am discussing only key points, guys. We are targeting 10 hours whole revision. So only key provisions, key points. Section 8, to start any business in charitable work or any social work, all of that, you can start this. Mainly you have to obtain a special license from the, that's it, you need to obtain a special license from the central government. And with this special license, you can do charitable work. Can I earn profits? You can earn profits, incidental, but that should go back for the objects. Can I declare dividend, guys? No, section 8 company cannot declare dividend, even 1 rupee not allowed. If you are not following the purpose for which you started, they will do, the central government will order for cancellation of license or amalgamate with some other section 8 company, or they will order for a winding up of section 8 company. Wind up, cancel license means you will now become a private or public company, or amalgamate with some other company. Already I am a big company, so I am amalgamated. Then one more key provision in section 8, special license, this one. Then you should not use the name private or limited. You can use like chambers, club, association, all of this. There are so many things that you can use. This is section 8, key provisions. Key provisions. Other provisions are for AGM notice for section 8 company, 14 days are sufficient instead of 21 days. These are the things, and then there is no limit on number of directors for section 8 company because charity. That's it. Following, guys, this is section 8. Section 9 is related to incorporation, what we study in foundation. So quickly, when a company is incorporated and it receives a certificate of incorporation, it becomes a separate legal entity, and it has the concept of perpetual. Once it becomes separate legal entity, it also becomes an artificial judicial person. This leads to what? This leads to the company able to buy or sell assets in its own name. It can sue or be sued. It creates a relationship between company and members. No partners, company and members. This is section 9. Foundation section, never tested in inter. So all these things I will tell you because you know where to give focus. Okay. Section 10 is again a small section. Effect of MOA and AOA. Ignore the section numbers if you feel overwhelming. Focus on the provision. I'm giving section number because later for those watching where to read this provision which Sir told. That's it. Effect of MOA and AOA says this creates a binding relationship between shareholders among themselves and shareholders with the company. Sometimes company is due to the shareholder in term of dividend. Sometimes shareholder is due to the company, call money. But shareholder is never due to other shareholders. That is section 10. We don't have section 11 in syllabus. Next important section 10A. This was an amendment few years back, but never tested after amendment. So it becomes important and it is a widely practiced section. Every company has to follow this. What is 10A telling? Very simple. From the date of getting your certificate of, from the date of getting incorporated, within the next, the company has to file with ROC two things that the address of the registered office of the company, permanent address. Because while incorporation, it used to be a temporary address that is filed. If that time also permanent, refile that this is the permanent address. Don't use the word permanent address. Just say address of the company, then registered office, and the first shareholders. In MOA, we have a clause called subscription clause. Do you remember that, guys? Subscription clause, where the first initial shareholders will sign. If they are the initial shareholders, they have to give money. Whether they gave the money, whether it's reflecting in the bank account. So two things I have to inform ROC within 180 days of certificate of incorporation, address of registered office, and no promoters. The initial subscribers of MOA have subscribed to the shares. These two things, section 10, capital A, important for exam. The section is called Commencement of Business. I will repeat, Commencement of Business. Following, guys, is the speed fine? We are going in marathon speed. Okay, fine. Section 11, we don't have, so leave it. 12 and 13 are related. 12, 13, 14 are related sections, or even 15 is related. We can run through everything. 12 talks about registered office. I'll tell you what's that. 13 talks about alteration of MOA. 14 talks about alteration of AOA. 15 not important for exam, but if there is any alteration over here, that alteration should be made in all copies. That's it. 15 is over. Look at how it's flowing. Okay. Now, alteration of MOA and alteration of AOA is important for us, but before that, I'll come to registered office also. Alteration of AOA. Let me do easy one. To alter MOA or AOA, what is the solution? AOA talks about internal rules of company. MOA talks about multiple clauses. Let's finish alteration of AOA. Section 14. You need to pass a special resolution. Within alteration of AOA, section 5 read along with 14, we have a concept again important for exam. Entrenchment provision. Another important one for exam. What is entrenchment provision? This been tested in foundation and inter, and no harm in testing again, because it's an important concept. What's entrenchment provision? I can keep rules within the company which is more strict than special resolution. Appoint me as the director of or shareholder or employee of Zomato. If you want to remove me, you have to pass a 95% resolution. or if you want to remove me, you can't remove me without my consent. Like that I can keep something, which anything, my own innovation, but which is more strict than, this will be included in the company's AOA at the time of incorporation. But later, sir, I want to now include, or now I want to remove something. Yes, you can do that. Is it a private company? Is it a public company? If it's a private company, if you want to newly include or if you want to remove, you have to pass a unanimous resolution. Unanimous resolution in our syllabus comes only in 3 places. Okay. Next, in public company, you have to pass a special resolution to include or remove this restriction. Are you following, guys? So for private company, so for a public company, it's not a superpower. With special resolution, you can change. But for a private company, it becomes a superpower for somebody who's using it. Don't use that word superpower in exam. Unanimous resolution. Done, guys. Entrenchment provision, section 14 comes to an end. Now 12 and 13. Let me finish 13. Alteration of MOA. Name clause. Object clause. Liability clause. Capital clause. Registered office, let me write here. And then subscription clause. I'm writing roughly good. I'm hoping you're able to understand. I'm just writing like a doctor. Okay. Subscription clause, I cannot alter. No question. Because they are the first members. Can't alter. Liability clause, you can't alter. Except in case of a guarantee company with the consent of members, you can't alter. Capital clause, can I alter? Yes. But section 61, alteration of share capital, they tested in the latest May 23 exam, so becomes less important for November 23. Okay. Next, name clause and object clause. Object clause, can I alter? Yes, I will pass. Importance of object clause, a company can do only those things that are mentioned in the object clause. You cannot do anything else which is not there in the object clause. Are you following, guys? If you do anything which is not there, it becomes void. That doctrine is called doctrine of ultra vires. Can I ratify this? No. An act which is done, if I put a timeline, if I did something here which is not there in the object clause, that's it. It is always void. You cannot ratify. You cannot what, guys? Ratify. That means it cannot have any retrospective impact. Are you following, guys? Hello, all of you with me? Clear? That's it. Object clause, simple foundation concept. Doctrine of ultra vires, can't ratify. What is there? In object clause only company can do. If you want to include something new, pass a special resolution. Name clause, company can alter the name. Yes. What resolution? Important point here, MCQ. If you change your name with the new name, use the old name for 2 years. That's it. Use the old name for 2 years. Now, since we are talking about company's name, at the time of incorporation of company, amended section, at the time of incorporation, you will do a name reservation. That name will be reserved for 6 months. No. New company, incorporated, name will be reserved for amendment 1 year back. See, new company, I'm talking about new company. When you incorporate, the name will be reserved for. That means within 20 days, you have to finish the process of incorporation. Are you following, guys? This is for a new company amended area. Next, this is all the other clauses alteration. Are you following, guys? Now coming to the last one, registered office clause. Once we finish this, within half an hour we are finishing 1 to 15 sections. Okay. Section 12 talks about registered office. Few key provisions. They will say use the name board in the registered office. It should be in English and the vernacular language. It should be legible, clear. In every document of company like business card, printer, fax, email, use the registered office. Name board should be there in all labeling, all of that. MCQ type of question. Then if you want to shift, there are 4 scenarios. I will mark this as important because I don't remember the last time he tested this. I don't remember the last time. It's been quite some time since they have tested this. Okay. At least a few years. Change within same city, town, village. Outside city, town, village. Within the same state, but ROC to ROC, state to state, different ROC to ROC. Within the same city, if you are in Chennai, from Nungambakam to Ananagar, not a big deal. You can change, just pass an intimate. That's it. I will tell you which all sections to remember also, guys. Some sections are mandatory. Okay. Outside city, town, and you are anyway passing board resolution plus, that's it, intimate ROC in 30 days. Now, many students get confused. Sir, when to intimate ROC in 30 days? I don't know. Look at this. I am doing a small deviation from section 12. A beautiful way to write the answer where the examiner will get bold. Okay. What is this? Board resolution. What is this? Whenever company passes board resolution, or you have to intimate within, inform, standard rule. How, sir? This concept is there in section 117. Special resolution is in section 114. Now imagine me writing an answer like this. Passing of special resolution. Will that come in your answer somewhere? In some answer, will you write passing of special resolution? How will you write? Company has to pass. I won't write like that. Company has to pass special resolution under section 114. Intimate ROC within 30 days. Inform MGT 14 as per section 117. That's it. He's bold. Are you following, guys? Same point. This section number you have to remember because this is mandatory coming in exam somewhere. Look at that. Special resolution is 114. Inform ROC within 30 days in MGT 14. 117. Include all this in the answer. Same thing will come if you are passing even. But 114 will not come because board resolution is not. So company has to pass board resolution, intimate ROC in 30 days and form MGT 14 as per section 117. So subtly we finished 114 and what is 114? Special resolution and. So whenever you say company has to pass ordinary resolution, company has to pass ordinary resolution under section 114. Doesn't it add value? And look how beautifully section numbers are placed. Sir, I want to remember this. How to remember? From 114, 117 is how far away? 3 sections, 30 days. That's it. Are you following, guys? You will remember for the exam. These are things you have to remember. Helps in presentation. That's it. Come back to where we left. So now, I will not tell you board resolution, special resolution, inform in 30. Default, inform in. Only in some sections, they will say inform in 7 days, inform in 15, 14 days. Though, that you ought to remember because that overrides the general provision of 30. So, default 30, sometimes 7. We will see that. Books of accounts or change of register, all of that. Able to follow, guys? Clear? Fine. Done. So, outside city, board resolution and same city, board resolution. Now, state to state, same ROC. This comes only in Tamil Nadu and Maharashtra because Chennai to Coimbatore. But don't worry, in exam, they will tell you same state, ROC to ROC. Last one, state to state, Tamil Nadu to Mumbai, all of that. Procedure, guys. I'm going to do a comparative study giving you the key points because both are detailed procedures. Here, I follow a timeline of 30, 60, 30. Here, I follow a timeline of 60 and, are you following, guys? Here it's what? 30, 60, 30. Here it is 60, 30. This is section 13, 12. This is section 13. This is section 12. ROC to ROC, but within the same state. This only is alteration of MOA. Okay. Here 30, 60, 30, you have to, in both the places, get permission of RD plus. Why RD? Logic is because it's multiple ROC involved. So get the higher authority power, RD. Both places, RD plus ROC. First get permission of RD in both places. That's why I wrote RD first. First get permission of RD. Here also special resolution. Here also, of course, board resolution will come. First board resolution, then special. Board resolution, then special. Are you following, guys? I'm being extremely fast, guys. Okay. I will tell the timelines last. Here, since you are shifting, you have to get consent of creditors, workmen, employees. Employees consent mean employees are not being fired, but we will not use the word fired. Employees are not retrenched. Employees are not retrenched. Fired means retrenched. Here also same, creditors, employees. Here also, if I am shifting location, you cannot shift the case where your case, court where your case is there. You cannot shift the court case. Here also you can't shift the court case. Are you following, guys? Are you understanding, all of you with me? What is additional here? Along with creditors, you have to get consent of debenture holders. Along with creditors, consent of whom, guys? Debenture holders. This documents gather all of this: consent of creditors, consent of declaration that workman is not shifting, court case will remain in the same location. In this case, same declaration along with the consent of debenture holders. It should be a latest list of last 30 days or 15 days. Section 13, yes, last 15 days. It should be certified by a CA. Last 15 days certified by a CA along with the directors. CAs along with the directors. Are you following, guys? Get all these ready. See, this can be a separate question or a case study question or an MCQ question. So, creditors, workmen, court, creditors, workmen, court, RD, ROC, board resolution, SR. Difference here is what? Debenture holders. Clear, guys? This is sections read along with rule. Okay. Here, what is it? First, file with, after you pass in both the cases, first let me finish section 12. What is section 12? ROC to ROC, same state. First to pass special resolution and intimate RD. RD should give me confirmation within 30 days. Once I get the once they give the confirmation, not 30 days, once they give the confirmation, within the next 60 days, go inform the existing ROC, then they will give a confirmation, then inform the new ROC within 30 days. Here, once you pass SR or board resolution, inform RD within 60 days. Once he gives the confirmation, inform ROC within. What is missing is the new ROC. They have not given timeline, but I will inform anyway. Are you following, guys? That's it. Clear? Remember, guys, in law one thing, RD or ROC, they will confirm to us. There is no timeline. Only we have to inform them within 30 days, 60 days or whatever comes. They will inform us in their own sweet time. You can't tell RD or ROC, come on, intimate me within 7 days. He'll slap you. Wait. Are you following, guys? Understanding? Only in some sections there is a timeline. In auditor removal with central government pressure, then RD, the tribunal should reply within 15 days. That I will anyway see when I go to section 140, removal of auditor. Are you following, guys? Clear? So all these timelines or for the company to intimate RD and ROC after I get reply. Following guys, this is the summary of both these sections. Are you able to recollect guys? Key provisions. Perfect. Next section 12 over, 13 over, 14 over, 15. What's 15? Alteration in every copy. Now section 16. Important for exam. Amendment. Latest amendment in our RTP also. Conceptually it's not that great, but it's an amendment. Whenever company has to change the name, not by itself, because RD has given us an order. Hey, your name is anti-India. Your name is against some company. You change the name. I have to change within 3 months. This is name of company. Sir, my name of company is fine, but my trademark is representing someone similar. So, again RD will ask me to change, like Adidas, Abibas, like that. So, if they ask you to change the name, again this Abibas should change the name within 3 months. Earlier time was different. Leave the earlier time. Whether change of name or change of trademark, if RD informs the company, you have to change within. But in trademark point, one important key thing. I started today Nike, like this, N-A-I-K, Nike. Okay. Now that order should come to me, whoever is asking me to change the name or whoever is complaining on me should complain within. Otherwise I will tell, hey, 3 years over. Nike also is a famous brand name, everybody knows. Like Abibas, they will not change because everybody knows. That's it. Exam what, remember, if you want to complain or make a request for change within, then RD will order, you have to change within 3 months. And once you change, again intimate ROC. Intimate ROC. If you don't change, don't intimate, penalty. Penalty sections I am not discussing, you have an idea. Able to follow guys. Important penalty sections I will tell you, read these things. Like this, there are some 7-8 penalty sections. At least read that. Because I know nobody is going to read all the penalty sections. Because I itself don't know. Okay. Following guys. Clear? This is section 16. Next section 17. What is section 17? Simple C category section. If somebody wants copy of MOA and it should be given to me within. Otherwise penalty of 1000 per day. Answer is there in the section itself. Give it to me within 7 days. 7. Otherwise penalty of 1000. 1. Following guys, if you want request of MOA and AOA, get within 7 days. Otherwise penalty of 1000. Not important. Never tested. If it comes, you remember. Section 18 also not that important. If you want to convert a company, they are mainly talking. If you want to convert from private to public or convert from public to private, change your, so you have to pass a change AOA. Private to public means remove the restrictions. Remove the restrictions. Public to private, add the, which one of these two has central government approval? Can you guess which? Public to logic. From public money I am becoming private. So public to private, same procedure as private to public. There you are removing restrictions. Here I have to add restrictions and get permission of along with special resolution. This is section 18. Are you following guys? Clear? Next. Section 19. Again you can mark it as important. Subsidiary company cannot have shares in holding. I wrote opposite, but visualize. Subsidiary should not have shares in holding company. But there are 3 exceptions guys. This exception is important because they have tested long back. Okay. Exception important. 3 exceptions. Such shares are held before it became holding. Such shares are held before the relationship of holding and subsidiary. Second, I am holding it in as a trust, as a trustee, and third, I am the legal representative. Sir, what is this? Shareholder is somebody else. In the holding company, shareholder is somebody else. He died. For him, I am the legal representative, subsidiary. So I am holding. Shareholder is somebody else. For his trust, I am holding. Trust has three parties: author of a trust, maker of a trust, or trustee and beneficiary. I am not the beneficiary, I am not the author, I am the trustee, just taking care of it. Like school is a trust, where the school principal is trustee, taking care of the school for students. Like that. Are you following, guys? I don't get any income, I don't get any power, I just have to take care. Are you following, guys? Clear. This is section 19. Next three sections, 20, 21, 22. With this, the first two chapters will come to an end. Preliminary and incorporation. Preliminary, once this gets over, I'll tell you what are the key things to remember. Okay. 20, 21, 22. 21, 20 talks about serving of. This 20 with 6 only came in latest exam. Serving of notice. Okay. What notice? How company will send notice to shareholder, member, or member will send notice to company, member to company, or company to ROC. Within ourselves, how we will send notice to each other? Company to shareholder, shareholder to company, company to ROC, ROC to company. Normal email, speed post, courier, registered post, everything. No WhatsApp. I'll come to WhatsApp. All this is there. Now, can ROC come to company's office and give it? Yes. ROC is in first floor, company is in second floor. Why post? So, this section also tells ROC can also drop the documents at the location of company. Same way, company also can go to ROC and keep it. So, simple. How to communicate? Dropping at the location, registered post, speed post, courier, email. Same for member. But for member alone, one thing is extra. If member asks for anything apart from this, company can do it, not mandatory. Company can do it, but the charges will be recovered from member is saying, Mohit is saying, I want only WhatsApp updates. I want update in Instagram channel. Company will give the update. Recover charges from Mohit. That's it. Are you following it? This is 20. 21 is simple. Who can sign documents for company? Company is entering into rental agreement. Who will sign? Only the KMP only can sign. Company is entering into documents. Any sign for company can be done only by or anybody one level below board of directors or KMP, but they should be authorized by the board. One level below KMP, but authorized by the. How will board authorize? By passing a. That's it. Board authorized by passing a board resolution. 22 talks about how to authenticate negotiable instruments. What are negotiable instruments? Part of our syllabus, guys. That also we will see. Not only Companies Act today, other laws also. Okay. Negotiable instruments. Very simple. Check, bill of exchange and promissory note. How to see? First is company having common seal authenticated by. No, company is not having common seal. Now company secretary plus. That's why I didn't write CS again. So first common seal. I don't have a common seal authenticated by company secretary and one. No CS also, sir. No CS, common seal, no company secretary. Then same provision. Copy, paste. This is section 22. Add in section 43. What is 43? What is 43, guys? No. 46. Share certificate. Remember, forget section number. In authentication of negotiable instrument, these are all not that important. Or authentication of share certificate, both it's same. It can be authenticated by company common seal. If there is no common seal, company secretary plus one director, no company secretary, two directors. Same thing is there in which section? 46. What is that? Share certificate. How to authenticate share certificate. So one provision, two areas. Done, guys. With this, we are done with incorporation chapter. Why I am doing it first? Because you skip these chapters. I am studying only meetings, sir. Auditors, dividend, I am very good. Incorporation also, if I take last today, how of you leave post lunch? That's it. Yeah, deposits also. It's very important for exam. Easy. Okay. Follow. Now just few basic concepts which I wanted to ensure you remember. What's associate company? Foreign company they tested recently. What is holding subsidiary? What is government company? Not less than 51% of paid up share capital. Government company. Then do you have dormant in syllabus? What is a dormant company? These things be aware, guys. Okay. Dormant company. And last one, 1%. So let me finish off the key provisions here so that actually unit 1 and unit 2 as per ICAI syllabus preliminary incorporation will come to an end. Dormant, mark it as important, never tested, and it is important. Yes. Guys, following associate company. Associate company in which one company has significant influence. What is significant influence? Has at least 20% or more, or controls the business decisions. Controls the keyword. Has at least 20%, controls the business decisions. Important. They can ask what is associate company. Next, foreign company, we all know, a company incorporated outside India but has a place of business in India either by itself or through an agent, physically or electronically. Either by itself, place of business, or through an agent, place of business, physical, office, or only online, website only is there in India. Incorporate outside India, place of business in India. Made Alibaba, you are buying from China, place of business in India, foreign company. Foreign company, not limited, very important for new syllabus, so leave it. They added a lot of sections from that, leave that, fine. Government company, I know you all know government company. Let me take a important question for exam. Let's take an RTP question to see if you're able to answer. Namo Limited is the holding committed. Shah Limited is the subsidiary. This is the holding. Namo Limited in Shah has, let's say, 50.21%. Namo Limited, central government has 80% share. Now, is Namo Limited government company? What about Shah Limited? Deemed to be a government company because control is by a government company. It was an exam question where students wrote no because they thought it should be more than 51%. That is for government company direct definition. A subsidiary of a government company is deemed to be a, so that time they tested 50.21, some of them got bold. Are you following? This is government company. Next, holding subsidiary, you guys know, guys, having more than, don't use the word 50, more than half of the total voting power, keywords, more than 50% of paid up share capital, gone, 0 marks. More than half of the total voting power, or controls the composition of board of directors directly or indirectly. So subsidiary is there. Then dormant is important. Dormant company is a company which is incorporated to hold any intellectual property rights in its name or for any R&D purpose or for holding any future projects or for holding any assets, they do not have any very good significant accounting, and the book says you can do only few things, 4 things, like paying ROC fees, legal fees, allotting shares, and some admin expenses for maintenance of office and records. So dormant company can do only these things: ROC fees, legal fee, allotment of shares, any admin expense, incorporated to hold any IPR in its name or future projects. This is how to incorporate as a dormant company. I can also become a dormant company. Adani can become a dormant company if for 2 years or 5 years they don't file FS or annual return. 2 or 5 guys. 2 years if I remember correct, but check, confirm. 2 years. 5 years, I don't know where 5 years. For 2 years, you don't file the FS or annual return. Since we are talking about FS annual return, let me finish another important section that you have to remember for exam. Sometimes I am deviating from the flow, going to key sections. Remember for exam this. How many times have you seen company should not have defaulted in filing FSR? Have you seen that? That means imagine writing company has not defaulted in filing FS or annual return. That looks good. Or company has not defaulted in filing FS under section 137 or defaulted in filing annual return under section. Add the section numbers. I told today we are going to learn 25 sections and go home. Key important sections which will definitely come in your answer sheet. So at least if you write some 10-15 sections in answer sheet, presentation will improve. One is 114, special resolution and ordinary. 117, filing within 30 days, form MGT. 137, filing. 92, annual return. Are you following, guys? When I should file again? Since we are discussing the same section, annual return when, FS when, annual return within 60 days from end of AGM. This also is from end of, but 30 days. That's all. 137, 3 is that 30 days. If you want to remember, guys. Okay. So 137 FS file to ROC within 30 days from end of AGM. 92 annual return file within 6 days from end of AGM. Important sections. Somewhere he will ask in answer. Because it comes in many concepts. It comes in prohibition of buyback. It comes in 67. It comes in ESOP. Many areas it comes. Sweat equity. Clear, guys? This is this. 137 filing of FS for whom applicable. There are some limits. Similarly, 92 filing of annual return. We have some limits. Since we are discussing what are those limits, 92, 137. 92 is applicable for a 137 any company or listed filing. Any company should file within 30 days. Are you following, guys? Private, public, any company. Here, listed company plus there are some limits. What are the limiter for annual return? Turnover, 1 second. Yeah. More than 50 crores. It's listed company and or listed company mandatory, guys, or turnover of company exceeds 50 crores, any company. Paid up share capital 10 crores, right? That more than or equal to 10, another limit. or. Okay. So, look at the applicability. 137 filing of FS is within 60 days from the date of AGM. Annual return is within, sorry, opposite. Sorry. Yeah. This is within 30 days. This is within 60 days. So let me summarize, guys. 137 filing of FS should happen within 30 days from date of AGM. Listed company or any company having more than paid up share capital 10 crores or turnover 50 crores should file within 60 days to ROC annual return. Following, guys, clear? Now again 137 tells certain companies when they are filing should file in a format called, they have tested a few times in exam, XBRL format, for whom it is applicable. Here we have a limit, guys. Every listed company, or if the company is following Ind AS, then we have turnover more than or equal to 100 crores, paid up share capital 5 crores, more than or equal to 5 crores should file in XBRL. So to summarize, I know we are deviating, but everything is part of syllabus. It's marathon. I'm trying to connect. Okay. 92 filing of recording. Repeat with me. Just don't keep looking at my face online live. 92 filing annual. The more you repeat, you have to go home and fall tired and sleep today. 92 annual return. Then file within 60 days. 137 FS, because we have 3, file within 30 days. Both from the end of AGM. 137 every company. Here listed company or any company paid up share capital more than 10, turnover more than 50. Here additionally XBRL is mandatory. Listed Ind AS or paid up share capital more than 5 crores or turnover more than 100 crores for any company. Sir, I am not falling in this limit. Can I file XBRL? Yes. I am a private company with turnover of 2 rupees, paid up share capital of 1 lakh. Can I file XBRL? Yes. But once you file XBRL, you can't come out. Once you touch, you have to remain there. So once you file, you have to file XBRL forever. XBRL format is not applicable for a bank, NBFC, insurance and housing finance. Not applicable because for them they don't follow Schedule 3. That's it. Are you following, guys? Clear this? 92 and 137. Let's come back to where we deviated from. Dormant is done, holding subsidiary is done, government is done, foreign is done, associate done, OPC. With once OPC gets over, unit 1-2 is actually done, and also we did 92, 137, 114, 117. Remember these sections. 92. Online and repeat with me. 137. Filing of FS. 114. 117. If you have not remembered sections today, you will remember at least 15-20 important sections. Following, guys. Now coming to OPC. 1% company. Key provisions. Key provisions. One member can start only, or one individual can start one OPC. Can a company start OPC? Can Tata start OPC? No, it has to be a natural person. Next, one OPC. Every OPC should have at least one. So as an individual, let's take Mohit for example. Mohit can be OPC, start one OPC. In some other OPC, he can be a nominee. Are you following, guys? A, B, OPC, member, nominee. X, Y, X. Allowed? Are you following? Allowed? X died. Y becomes member. X dies. Y becomes member. Now Y is member in 2 OPCs. He didn't plan for it. Did he kill X? No. Now what to do? He has within 180 days which OPC he wants to continue and find some other nominee. This is within 180 days. Then another key provision. To be a member or a nominee, should I be Indian resident? No. The word is Indian citizen. There is a difference, guys. Indian citizen means somebody who has the Indian passport, who can vote in the Indian election. But they won't ask an exam. Indian citizen. And he should have stayed in India for 120 days or more in the previous financial year. He can be a resident, need not be a resident. I don't care. We focus only about Indian citizen staying in India for more than 120 days in the previous. One person company cannot buy shares or any securities of another company or NBFC. Why? If you remember in foundation, we had a case called Dingshaw Manak G. Petit, production of revenue and tax. I will invest in many companies and split my income. So one person company cannot invest in the securities of some other company or an NBFC. Are you following, guys? Clear? So you know 120 days, then 180 days comes here, and it has to be individual, one OPC or one nominee. Clear, guys? Then the concept of meeting all that not applicable for OPC, very limited applicability. Are you following, guys? One OPC done, unit 1 done, unit 2 done. Let's go to unit 3, which talks about prospectus. Who can issue prospectus? Which company? Public company. Who will start a public company? Person starting a company is called. So promoters will start they will issue for a promoters is 2 subsection 69, prospectus 2 subsection 70, public company 70. So promoters are issuing a prospectus for a public company. Fine. Who is a promoter? The definition can come in MCQ, guys. Otherwise, I will not be taking all this. Promoter is somebody who starts a company or whose name is mentioned as promoter in annual return or prospectus. Now you know what's an annual return. His name is mentioned in annual return or in prospectus, or he has control in the company, shareholder, or in whose directions board of directors are accustomed to act. Are you following, guys? For CSK, control is with India Cements. They have more than 50%. For CSK, even though Dhoni is not having share, the board are accustomed to act in directions of Dhoni. Then Dhoni will become the promoter if he has that instruction power. Following, guys. Then annual return, prospectus name. What is prospectus? Important definition. If I send you a WhatsApp message, hey, invest in the company, is it a prospectus? If I write on this wall, come on, put in projector, invest in this company, is it a prospectus? Yes. Any document described and issued as prospectus is called a prospectus. If you are inviting money from anything, sir, I wrote in my hand, QR I printed here, scan for investing in company, it becomes a prospectus. That's it. Public company, you know, well, it's not a private company. That's it. Now let's go in sections. 23 talks about who can issue prospectus. Who can issue? Just now you told me. Public company. 23 over. 24. Not there. 24 not there in syllabus. Leave it. 25. Deem prospectus. Now that we came to 25, another story for sections. 25, 50, 100. We are going to connect to cricket. This example now, let's say, subject to yesterday's match, leave yesterday's match, guys. But generally, let's say, if somebody is scoring 100, is it an ordinary event or extraordinary event? Extraordinary. Especially KL Rahul scoring 100 is an extraordinary event, but yesterday, yeah, he's hit, so I will take my words back. Okay. So KL Rahul scoring 100 is an extraordinary general meeting. Now, yesterday when the players were playing in 50, you thought, did you guess somebody will hit 100? You are hoping. First of all, you shouldn't have watched the match with exam in November. Following, guys. Okay, fine. How many of you saw the match? Why? Okay, fine. Now, follow, guys. Next, if somebody hits 50, you will think they are going to hit 100. So, in advance, you will think they are going to hit 100. So, calls in advance. If somebody is hitting 25, you will think good player. He's going to have a good future. Nicely is playing. Deem prospectus. So if somebody hits a 25, you will think he's having a good future, good prospect. Deem prospectus. If they hit 50, you will think they're going to hit 100. Calls in advance. 100 means extraordinary event, extraordinary general meeting. Sir, which section should I remember? Tell me that. 100 EGM, 96 AGM. Are you following, guys? 100 is EGM, 96 is AGM. Imagine KL Rahul got out in 99. He would have been disappointed. He was disappointed yesterday for winning the match. So, if you get out in 99, 99 punishing yourself, penalty for not having general meeting. Fine. So, section number over. 25 is what? Deem prospectus. 50 calls in advance. 100 EGM. 96 AGM. What all sections we learned today now in one day itself? 92 annual return. 137 filing of FS. 114 ordinary standard resolution. 117 file to ROC. 25 deem prospectus. 50 calls in advance. 100 EGM. 96 AGM. Following, guys. Then 285 small company. Small company. That's it. Next. Come to 25 deem prospectus. Sir, what is the provision? If somebody issues a prospectus indirectly raising money from public, it's called a deem prospectus. Ideally, I should be taking this section last once you know all the provisions of prospectus. But since we started, let's say Adani wanted to issue money from public. But if he is issuing money from public, he has to follow prospectus chapter. So, he issued shares to Badani, some other company, Badani Private Limited. He issued shares to Badani. Whose shares? Adani shares. Now, this Badani, call it mutual fund private company, issued the same shares of Adani to the public and collected. So, indirectly, Adani is issuing money from public. This is called a deem prospectus. Now, sir, what to remember? There should be an agreement between Adani and this. Adani is called company. This Badani is called issuing house in the book, issuing house. Such an agreement should be for without consideration. Because if Adani gives shares and Badani gives money, it is for consideration. So it should, then what Badani will do? I will give 20 rupees. So there should be no full consideration. Full consideration should not be there. And within 6 months, if Badani issue the shares to public, it is deemed prospectus. Sir, can you summarize? I am not able to understand. Adani issued shares to, and within 6 months, Badani issued the shares to public. This is called a, why? Because the agreement between Adani and does not have full consideration. If there is full consideration, no deemed prospectus. Following, guys. Sir, what if I issue to public after 6 months, not deemed prospectus? They are trying to say, how long will you wait without getting the money after issuing shares to some other issuing house? Are you following, guys? If there is a deemed prospectus, follow sections of this chapter. Next, 26. Contents of prospectus. Simple, basic, never tested. Whatever you think is the contents. Because prospectus is 400 pages. Company's financial data, past, future. Why I want money. Why I am projecting for the money. What is the risk of the project. what technology, when I am starting the project, when project will get over, who are the founders, who are the promoters, how we will get return, what is the risk, what is the impact on environment, whatever you think you write. Subject related, don't write, I was sad yesterday. No, okay, fine. Are you following a section 26, contents of a prospectus? Not that important, but if it comes, never came, if it comes, you know how to deal with it. Next, 27, 28, 29. 29 simple section, guys. DMAT. Shares should be in DMAT, and they tested in one of the latest attempt, November 22. This section came. Okay, shares should be in DMAT, and then 28 talks about a concept of, I will come back for this last, it becomes easy for me and you. 27 is important. Variation of objects or terms of issue. Sir, what is this? I raised money, Apollo Hospital raised money to build hospital. Now they are building a theater, not operation theater, movie theater. They are building a movie theater. Can they do that? No. Why they are saying, I raised 100 crores. Hospital is ready in 80 crores. With the remaining 20 crores, I want to build a movie theater. You can do that. But follow section. Very simple section. In one line, I can finish. Pass in postal ballot. But don't have to mug up. When we see postal ballot, I'll tell you what all you need. Variation. Pass special resolution. Then, alter the MOA's object clause, or alter the terms of issue, then publish in website, publish in 2 newspaper, 1 English, 1 vernacular, you know that well. And lastly, if there are any dissenting, always there will be one guy, I don't like this, he will give bad review. For him, get out, send him out of the room and close the door. That's it. With the money, give us money back. Following, guys. Now in many sections, we will have this website and 2 newspaper. Today I will just say, website means, in exam don't write website. Publish in the, publish in the website of the company, if any. Remember to use the word if company has website. Whenever I say 2 newspapers, write a detail point. Company has to circulate, publish in 2 newspapers having wide circulation in the location of the registered office. 1 English, 1 vernacular. Don't write regional local language. That means vernacular language. Clear, guys? So 27 is simple. Pass special resolution postal ballot. Alter the object clause or alter the terms of issue along with explanatory statement. Write that 1 or 2 explanatory statement. Publish in website, 2 newspapers, dissenting shareholders, exit opportunity. Are you following, guys? Sir, when explanatory statement will come? I get confused. There is a shortcut for that. I will tell that in a while. Are you following, guys? There is a very good shortcut. I will take it up so that you will never forget when I should write explanatory statement will come. Are you following, guys? Clear? Okay. So we are done with 27. 28 I will come back to it at the end of the chapter. Remind me. 29 is what? Everything in DMAT. There are some small procedural points. You have to pay fees to the depository. Then you have to give details of how many shares are in DMAT, how many are not in DMAT, all that to ROC, tested recently. Just have a quick look. Now from 30 to 42. Okay, easy to learn all these sections. Follow, guys. 30 is not there. 33 is not there. How to remember this? 31 and 32 talks about shelf prospectus and rendering prospectus. 34, 35, 36, 37 talks about criminal liability, civil liability, class action suit and punishment for inducing people to invest. 38 not there. 39, 40 talks about allotment of securities and listing. 42 talks about private placement. It comes in groups. 30 not there. 31, 32. What is 31? Okay, one is shelf prospectus, one is red herring. In shelf prospectus, validity is, so 31 is, answer is there in section itself. So 31 is what, guys? Shelf prospectus. What is shelf prospectus? Sir, if you don't, again I'm telling you, don't know section numbers, leave it. Focus on the concept. Shelf prospectus says, once you issue a prospectus, I have a long project, 7-8 years project. I can't keep issuing every year, again and again, correct? So once I issue a prospectus, the prospectus will be valid for 1 year. I'll give you breakfast break and after another half, around 10, I'll give you a breakfast break, lunch break. Marathon means no continues till evening. Without break, then I'll also need something to eat. You'll also need, okay? You will have the breaks, fine. Another half an hour, I will finish this chapter, teach you something very, very important. After that, for what all explanatory statement will come, you will teach me. You don't have to mug up. In many procedures, sir, for this explanatory statement, I don't know when to write. You will teach me. Wait and see. Let's finish this chapter, do that and then go for break. So simple. Shelf prospectus. A prospectus issued which is valid for, fine. Once it's valid for 1 year, you can make any number of issues during the year. Do without issuing prospectus again. But before every issue, 30 days before issue, give an update. Update about what happened in this period. That's called information memorandum. Are you following, guys? Information memorandum will be given. Then, information memorandum 30 days before the issue. Sometimes some enthusiastic shareholders will pay full money now itself. Later, can he get a refund? Yes. If he requests for refund, refund should be given within. Basically, calls in advance. Kekamle is given. Without asking, he gave money. I will return the money. Calls in advance. Are you following, guys? Hello? Calls in advance within 15 days. Clear, guys? So, what remember? Shelf prospectus is valid for before any issue during the 1 year. You have to issue information memorandum 30 days before the issue. If someone gives money in advance, refund within. Now the catch here is this 1 year starts from date of issue of prospectus or date of first issue. It starts with date of the first issue when you get the money. Usually when I issue the prospectus, I will collect the money. So both will be the same. Are you following, guys? That's it. This is section 30. How to remember? 1 stands for 1 year. Okay. 32 talks about, very simple, not that detail we don't have in syllabus, very 2 lines only in book also. Red herring prospectus is the MCQ type of question. Is the prospectus where number of shares and price per share is not available. Only what's available is how much I want to raise. I want to raise 10,000 crores. Then based on the issue, I will divide by number which market responded and then find number of shares. See, there's a method as to logic as why it's a red herring prospectus, why the name came, how it functions. I'm not focusing on that today. Clear, guys? That's a different video. That's 80 hours of class. Today, 10 hours of finish. Clear, guys? So, RHP is what? Where number of shares and price per share is not mentioned. Before the after the offer closes, within 3 days, you have to intimate ROC about the details of the price. Are you following, guys? Clear? No, prior to issue, you will file the RHP with ROC. So if I put the timeline, if this is the open of issue, 3 days before I will file RHP 2, then offer will be open for minimum. Then after offer is closed, you have to again intimate ROC what is the final price and how many shares are issued by filing final prospectus. Are you following, guys? Clear? This is section 32. So if you look from 30 to 42, it's so easy. 30 is not there. 31 shelf. 32 RHP. 33 not there. So every not there middle there will be one concept. 30, 31, 32. 31 is what? Shelf. 32 RHP. 33 not there. Now very important, 34, 35, 36, 37. For the past 3 attempts or 2 attempts or even the latest attempt, they asked only this. Criminal liability, civil liability. We can look at it 2 ways. Sir, last 2 attempts they asked this only, sir. Then my attempt, this will not come. Correct, you are right. Or last 2 times they asked, they might ask again. So I am not the one to judge, but I am just telling you. Okay. Criminal liability means you will be imprisoned. Criminal means mainly imprisonment. So 34 is criminal liability, 35 is very simple. You cheated the public and took money. Can you smile? I won't let you smile. If you cheat the money and cheat the public and take money, call yourself as a promoter, call yourself as a director, call yourself as expert who said this is possible, or any other person who signed, authorized in the prospectus by giving a misstatement, which is of course material, or omission of a fact which is material. So material is for both. Misstatement, which is material, told something wrong which is important, or omission of fact, suppression of a fact which is material, lied something which is not there, again that is material, then that impacts the shareholder's decision and he invested because of that, then criminal liability means he will be imprisoned and is liable under section 447, fraud. Civil liability, because of you, who all suffered, public, all the people who purchased the share, all the loss, you have to compensate. Liability is unlimited. Till I remove the last shirt you have to pay. Following, guys. So civil liability, compensate everybody who suffered. Criminal, promoter, director, expert, any person, misstatement or omission of fact is material, criminal liability. Now, how to escape this? You have to prove it is not important. I am giving prospectus for constructing new building. I told I will paint in white. I painted in grey. Is that material? No. Fine. Not material. I have to prove. Or after issuing, you knew something was wrong. So you have to withdraw your consent. Whoever it is, promoter, director, expert or any other person, upon getting the knowledge that there is a misstatement or a omission, you have to withdraw your consent. Sir, already prospectus issued, sir. How to withdraw consent? Give a public notice about the same. Whenever you are aware, try to give a public notice or withdraw your consent. Sir, without my consent or without my knowledge, Mohit is saying I am very innocent. They asked me to sign, so I signed. They asked me to sign, so I. Charan told, sign here, I signed. I believed him and signed. Charan did the misstatement. Mohit is in trouble. I don't know anything. Will Mohit be arrested? Yes. Why you signed? But Mohit has to prove that he is not aware of the same. That falls on him. So simple, guys. If you are aware of something, withdraw your consent. If you are aware after the prospectus issued, make a public notice. And lastly, if you are not aware but you sign, you have to prove that you are not aware. That's your thing. Criminal liable under section 447. That means imprisonment with fine. Civil, compensate every other person. That's it. Are you following, guys? Both will apply. If there is a misstatement and omission, both will apply. Criminal means arrest and penalty for you. Civil means, no, not penalty. Civil means whoever suffered the loss, compensate them. Both will come. Are you following, guys? Clear? A famous exam question, they will tell, shareholder did not purchase shares, you looking at prospectus, but he purchased based on share market. See, expert also it's in prospectus. I purchased based on share market, purchased in the market using Zerodha app. This section not applicable. It's applicable only if you buy relying on the prospectus from the IPO issue or FPO, not from market. What is 36? Now, you would have basically 36 talks about inducing a person to invest. Class action suit is, just check if it's opposite or same. Yeah. 37 is class action suit. What is 36? Mark it as important. Never tested even once, but worthy of being tested. Okay. If anybody induces another person, for example, if Mohit is saying, let me take revenge, he is inducing Charan. Inducing Charan for what? To three things. Inducing Charan to become an underwriter of the shares, or selling him any loan facility, or I'll explain, credit facility, or making him invest and earning through price fluctuations, making profits. Let me explain, guys, what they are saying here. Mohit told Charan to become underwriter of a share. Everybody knows what underwriter is? Yes, he believed him and became a underwriter. Gone. Here, Mohit will be liable if Charan suffers loss. Loan facility. Many times they will come and tell, take credit card. Do you want this loan? This is the best loan. How many movies it came? Mohit induced Charan to take a loan facility or a bank overdraft from a, or you see so many Telegram groups or YouTube channels. Buy this share, buy that share, making him invest. Because you invested, I will sell or buy that share before you and make profit through price fluctuations. If this happens, are you following, guys? Make Telegram groups, buy this share, you will all buy that share, but before you I will buy. So share price will go up, I will earn profit. If this happens, 36 says you are liable. You are liable. Following, guys. This section many of you would have skipped. That's why I'm spending extra minutes. Important for exam. Next, 37. What is class action suit? If all these are, see, 34, 35 and 36, who is affected? Public. So, each person can't go and file case separately. All of you come together and file a group case called class action suit. You will say, come on, sign this petition, class action suit. Are you following, guys? So, what is 30? Not that. 31, shelf for 32. Reddy, if you keep repeating, you will learn, guys. 33, not that. 34, 35, 36, 37. 34, criminal liability. 35, civil. 36, 38, 37, class action. 38, not that. 39 and 40, allotment of securities and listing on stock exchange. Allotment simple, guys. Allotment first, offer open, offer close. Offer should be open at least for, not in Companies Act, it's there in SEBI, but they have asked in exam. Offer open at least for, once offer is completed, allotment should be done within but I can do the allotment only if you receive minimum subscription of 90%. That's it. Less than that, underwriter should save you. If you don't, then if you don't do allotment, refund within with interest of 15%. 15%. Interest of 15. Are you following, guys? So again, if you complete allotment, good. File return of allotment within, check that. Fine. Following, guys. Hello. Are you all with me, guys? Offer open, offer closing. Offer will be open for 3 days. Once offer is open, do the allotment within. If you don't get minimum subscription, or if you have not done any allotment, then refund within 15 days with interest of 15% after 15 days. That means interest is from the 46th day only interest will come. Otherwise, no interest. Otherwise, you complete and do the return of allotment in 30 days. That's it. File to RO. That is not much important for us. Are you following, guys? All of you with me? Hello. One more important thing. In school, we have studied share application, allotment, first call, second call. That application money should be at least of nominal value. So if share issue is 10, what is 5%? 50 paisa. Correct? No problem. So share issue is 10, then at least 50 paisa should be calculated on application. Today we don't have that practical applicability. This is section number 39. They have tested many times. Okay. Next is section number. This talks mainly about two things, guys. Once you finish up allotment, you can apply to stock exchange to get the shares listed in the stock exchange. Are you following? If you don't get permission for listing, then what happens? Allotment is void. Money has to be. Important exam question. I am the company, I am telling all of you shareholders, hey, I will apply to stock exchange. If we get permission, I will do the allotment. If I don't get permission, then I will keep the money as unlisted shares. Are you okay? You are saying yes. It's okay if you don't get the shares allotted. Such an agreement between us is void. Are you following? Meaning, shareholders cannot excuse the fact that stock exchange did not give the permission. So simple. What remember for exam? Section 40 talks about application to be dealt with stock exchange. Once you finish allotment, apply to stock exchange. If you get the permission, proceed for allotment. If you don't get permission, allotment is void. Money will be refunded. This also talks about underwriting. Underwriting, shares, debentures. Shares percentages, 5%. Debentures, this is the maximum or minimum? Maximum. Or amount in AOA, whichever is less. So for shares, the maximum percentage is 5%. For debenture, it is maximum 2.5 or AOA, whichever is less. Now I am saying one more thing. Follow. For paying underwriting, I am making an issue. Can I use this money to pay underwriter? I am making an issue. I am making issue of 100 crores. I got 88 crores. Deficit is 2 crores. That who paid? Underwriter. To pay 2 crores, I am using from 88. Can I do that? Yes, you can do. You can pay underwriter from proceeds of the issue itself. Important. Are you following? It's never tested, but you can pay underwriter from the proceeds of the issue. But what they tested in exam? Percentage. Debentures 2.5, shares 5% or AOA, whichever is low. This is section 41. 40. So if you see 34 is criminal, 35 civil, 36 punishment inducing person, 37, 38 not there, 39 allotment, 40 listing and underwriting, 41 not there, 42 private placement. Are you following, guys? All of you with me? Now before private placement, I want to do 2 small sections, then finish private placement, go eat and come back. Okay. Now 28, I told I'll come to end of the chapter. Offer for, understand what is offer for sale section is over. Company, shareholders, public. So far what we studied is where public wants to issue, company wants to issue shares to public. Now what we are going to see, if the existing shareholders want to sell their shares to public, they will give it to the, and company will sell it to the, they will collect the money from public and company will give the money to. For this process, company is helping, they will incur expense, get it reimbursed from shareholders. Then that's why they are saying concept of underwriting, concept of minimum subscription 90%, all these are not applicable for section 28 because I am not making a new issue. So you can't tell concept of allotment, all these are not applicable. Are you following, guys? Concept of applying to stock exchange, not applicable. All the provisions, because I am not issuing new shares. Existing shares, it's like from you I am buying books. The exam's over, give me the books. I will give it to juniors. Collecting from you, giving to juniors, collecting money, giving it to you. Are you following, guys? That's what company is doing. Collecting from existing shareholders, selling. So concept of underwriting, minimum subscription 90%, application money 5%, all those are not applicable. That is section 28, offer for sale. Are you following, guys? So with this prospectus chapter comes to an end, subject to, but before that I will take explanatory statement, what all is needed, then private placement will go for break. Is that fine, guys? Hello? So take a moment, absorb whatever is gone. Here and there I will keep drinking water, otherwise I will have to put leave for class tomorrow. Follow. Look at this, guys. We have AGM, middle I am introducing other concepts so that important ones, okay, and later when we go there we can get fast. AGM and EGM. Follow, guys, very important. Whatever happens in an AGM and whatever happens in a EGM, whatever happens in a EGM is called special business. Anything in EGM, I'm hoping all of you know what's AGM, I'm not getting there, okay? Whatever happens in EGM is, whatever happens in AGM, no. Whatever happens in AGM, there are 4 things. Only those 4 things are known as, I will write what those 4 things are. Adoption of, declaration of, appointment of directors, appointment and reappointment of, appointment and reappointment plus remuneration for. This you have to remember. It's very, very basic. What are the 4 things that happens in an AGM? Mandatory, it should happen. If these 4 things don't happen, AGM is not over. It's like you eat a starter, main course, dessert. Otherwise, meal is not complete. Like that for AGM, if these 4 things are not done, is the AGM over? What are the 4 things? Adoption of FS, declaration of dividend, appointment or reappointment of directors, appointment, reappointment and Remuneration of auditors. These four things are known as ordinary business. Are you following, guys? These are known as ordinary business. So first to know what is ordinary business, special business. Many students get confused here. We are going to finish the get the clarity here. Okay. So AGM, these four things are EGM. Everything is. Even these four things in EGM becomes a. Now coming to the concept. Everything which is ordinary, I already know it's going to happen. So no need explanatory statement. Every special business needs an explanatory statement. Are you following, guys? That means now you tell me bonus issue, ordinary business or special business? So it needs sweat equity shares, ordinary business, special business. So it needs what? Changing of registered office, what we saw, ordinary or special business. So it needs. So I am not going to tell you in provisions, procedure, hey, this needs explanatory statement. You know in answer when to write an additional point, explanatory statement should be attached along with the notice where company is going to pass resolution. Buyback, do I need it? Because it's a, doesn't matter if it's AGM or, are you following? So because explanatory statement is going to come in all provisions, section number is, in many cases, 1 or 2. From 100 to 110 we have a story. When I come there I will teach you to remember all the section numbers. I told you today, end of the day, 25 to 30 key sections you will go into your system. Okay. Following, guys. 1 or 2 is what? Fine. Now, look at this. Can I say for every ordinary business, I will pass an ordinary resolution? Yes or no? Yes. Those 4 things. See, ordinary business, only those. Can those 4 things happen in EGM? Can I call that ordinary business? No. Special, I told you, anything in EGM is what? Even if it's those 4 things. Now, every ordinary business needs a. Every special business therefore needs a. Don't write special business, special. No. Every special business can have unanimous, can have anything. So, ordinary business, ordinary resolution, yes. Special business can be anything. Only special business needs a explanatory statement. Are you following, guys? Hello? Now, section 13 spoke about shifting of registered office from state to state. Now, when this section comes, look at my answer. What all my answer will have? Company has to pass. You will, and company has to. This is what business? So, there has to be. So, when I write this answer, I will not write like this. Company has to pass special resolution under section 114, intimate ROC within 30 days, inform MGT 14 in 117. Such a resolution should be attached with an explanatory statement under section 1 or 2. Are you following, guys? So this will come in every procedure where there is going to be a special business. That means buyback. Buyback needs special resolution. So if buyback needs special resolution, I will write the same thing. Pass special resolution in 114, intimate ROC in 30 days, MGT 14, and company has to attach explanatory statement under section. So we are trying to frame points which will definitely be there in your answer sheet. Are you understanding? Deposits, company has to pass. If special resolution comes there, in certain cases, then 114, this 102. So any procedure has this. Are you following, guys? So now do you know when explanatory statement comes? Whenever there is a special business. For that you should know what is a special business. Anything in EGM is a special business. So therefore, what is an ordinary business? Those 4 things. Anything apart from those 4 becomes special business. So basically, in every procedure that you write, you can write explanatory statement apart from those 4. Clear, guys? Done. So we have learned new section. So let's see what all sections you know from the start till now. Section 285, small company. 92, annual return. 137, FS. 114, special resolution or ordinary resolution. 117, file to ROC within 30 days in form MGT. Along with this 102, explanatory statement. Are you following, guys? 100, EGM. 96, AGM. Are you able to follow, guys? Put that effort only for today. If you're watching this recording, 20 sections. Imagine your answer paper. Here and there you have some sections, important sections. Make a lot of difference. Now before we go for break, last section. Private placement. Mark it as important for the exam. They tested last in 2019 or something. Around that time. Okay. 2019 or 2020. It's been 2-3 years since they tested. Are you following, guys? Private placement, let me first finish off the timeline. Then we'll discuss about limits. Okay. So timeline, limits, simple, guys. Fine. Private placement means what? Issuing shares to selected individuals of my choice. My choice, selected individuals. Correct, guys? Whomever I select, they are known as identified persons. I selected Mohit, Charan, Aravind, then I selected a few people, let's say Sandhya, all of them. To those people, within 30 days, I have to give the PAS 4, leave the form number, I don't want to get too much into it, give PAS 4 to them. Within 30 days, give them basically the offer, invitation to offer. Okay. Then again within the next 30 days, inform that I gave the offer. Are you following, guys? So choose identified persons, give them the offer within 1 point. Then intimate ROC within 30 days of giving you the offer. Now you will give me what? Money. That money should come only in banking channels, no cash. This happened, this section is there in our syllabus because of a famous case law, Sahara. Indian sponsors 2003 World Cup because of that Sahara. Okay. So money should come only because of banking modes. Are you following, guys? Once this gets over, once banking channels gets over, then you will apply for offer, you will give the money. Once you give me the money, not from this day, I'm just saying, once I receive the money, from the time I receive the money, here there is no concept of offer open, closing and all, because I will give at different points. Once I receive the money, I have to do allotment within, allot in. If I don't do allotment in 60 days, refund in with interest of 12%. There's a technique how to remember this also, I'll tell you. Okay. How much, guys? 12%. Now key thing here, interest, is it from the 76th day or 61st day? Interest is from 61st day. Sir, what, sir? In that allotment, interest was from 46th day, because there only we had 30 days plus 15. Here already I gave you 60 days. So refund within 15 days along with interest of 12% from the 61st day. Are you following? So I didn't refund within 15 days also, penalty. There is some penalty you will see. Sir, I completed allotment, sir. Why should I refund? I finished the allotment. Then within the same 15 days, file return of allotment to ROC in PAS 3. So look at the timeline. Beautifully it comes. Once you receive the money, allot within 60 days. If you finish allotment, file return of allotment within 15 days. If I don't finish allotment, refund within. So basically my timeline splits like a branch. 160 days gets over, allotment done, good. Return of allotment in 15 days. What details? Who is the shareholder, his name, his PAN card, then how much amount, all of that. No sir, did not do allotment. Refund within 15 days along with interest from the 61st day at 12%. Are you following guys? Hello, are you understanding? Now that we are discussing about 12%, sir, I am getting confused. Very easy. What section is this? 14. We have another section 124. 124 talks about unpaid dividend account. Everybody knows what unpaid dividend account. If you do your transfer, if you do dividend is not paid or claimed within 30 days. In unpaid dividend account also interest is. What is section 120? Now reverse this 24. What is it? 42. Private placement. Here also interest is 12%. Are you following guys? So like this we have techniques to remember a lot of things. I am trying to tell you, I am not sure if you will remember everything, but I am sure something will come in exam. Okay, fine. Clear guys? So 124 is unpaid dividend account. There also interest is. Reverse 42. Private placement. There also interest is. But in allotment of shares, section 39, there interest is. That is the only place in your syllabus where interest is 15%. No other 15%. Full syllabus in our inter. Are you following guys? 12 comes only in these two places. 124 and 42. What is left is 18. I'll take that later. 18 is more of a penalty section. Okay. We'll take that later. No need to confuse. Are you following guys? Now for the entire private placement, can you tell me what resolution? Guess. Special resolution. What business? Therefore you will have. That's it. So 2 more points. Company has to pass special resolution. So you will write section 42, special resolution, 114, MTD 14, 117, explanatory statement, 102. Look at how many sections in the same answer. Are you following guys? Clear. Next. In the same section, you cannot make private placement until if there is some other offer which is pending, and you can't make public advertisement. Because the word is what? Private placement. That's it. Now, last one. This is the procedure, guys. This is the procedure. I hope you're able to follow. Those who are watching recording, whoever wants to copy can pause and copy. I'm not giving time for you to copy this down. Here, if you want to copy, running notes. That's it. But anyway, it's all there in whichever book you're reading. Okay. Fine. Lastly, private placement can be given only for maximum 200 individuals or 200 people, whatever it is, in one financial year. How many? 2. This 200, should I count equity shares separately, debentures separately, or all put together 200? Separate. There's an explanation here. All separate. All separately 200. That means equity shareholders 200, debenture holders 200, whatever preference shareholders 200. Each class separate count of 200. So regarding 200, what all we saw? In one financial year 200, each class of security it is 200. The limit of 200 is not applicable, or you will not count in 200 if 200 is issued to QIBs or ESOP. Are you following guys? QIBs or ESOP you will not count because they are big investors. QIB, ESOP is employees. For employees I give shares to motivate them, not to get money. One more thing regarding 200, what is that? The limit of 200 is not applicable to a NBFC and housing finance. And why? Their main work is to get deposits and issue. Okay, so simple. Sir, exam what remember guys? 201 financial year. The limit of 200 applies separately for each equity shares, debentures, all of that. The limit of 200 for counting this 200, like how that private 200, I will not count QIBs or ESOP, and this 200 concept itself is not applicable for NBFC. Housing Finance Fund. Then another amendment which is there in RTP in private placement. If you are doing private placement to countries because of fraud, they bought this in one of the latest amendments there in RTP. All neighboring countries like Nepal, border sharing, Bangladesh, any neighbor countries, border sharing countries, from there if people are investing in banking modes, you have to intimate whom? Just for that forex and black money conversion, they are keeping this. Following, guys, and I will count them also for the purpose of. Are you following? It's an amendment there in the RTP. Clear, guys? This is with regarding private placement. To summarize once, identify persons, give them offer within, intimate ROC in, allot within. Once allotment is over, written off allotment in 15 days. No allotment, refund in 15 days with interest of 12%. Money only in banking modes. Water solution, special, along with explanatory statement. Limit of 200 is for one financial year. Apply separately for each equity shares, and it doesn't include QABs and ESOP, and not applicable for NBFC or Housing Finance Bank. Are you following, guys? Are you understanding? Clear? Done? Fine. So with this, we'll go for a break and then we'll resume post Companies Act. Second half also, from second session to lunch, we'll continue with Companies Act and try to close. Then post lunch, in one session, we will start and close other laws. I hope all of you know my name. Let me introduce myself. In the marathon class, I am Karthik, CA Karthik Manikonda. Just introducing my name for somebody who's new for the class. That's it. See you guys in the next session. Okay. So in the previous video or previous session, what did we predominantly see? We saw from section 1 to section 42 was done. Apart from that, we also learned section 2 is what? Annual return. We also saw section 137, filing of FS, 114, ordinary and special resolution, 117, filing to ROC within 30 days, 102, explanatory statement, 2 subsection 85, small company, 25 was deemed prospectus, 50 calls in advance, 100 was EGM, 96 AGM, and then this was the key sections we saw in the first video, and we saw many techniques on how to remember these sections and what's important, why these concepts were important. Correct? Now we're going to continue with the Companies Act, go on for the next 2.5 hours and try to accelerate as much as possible. Let's start off with section 43, which is share capital chapter. 43 is simple. Like I said, just to reinstate here, we are going to go from 1 to 148. Every section I will walk you through. That is the full syllabus. What is important, we will emphasize more. What is important for your attempt, November 23, I will tell you. Clear? If somebody is watching this recording without watching the first part, go watch that. There are a lot of important things over there. 43 is simple, guys. They may not even ask this in school exam. Kinds of share capital, equity and preference. That's it. Fine. 44 we don't have. 45 we don't have. But since, the next 46 we already finished in the previous video. Signing off share certificate. Let's again revise. Who will sign? Common seal I will sign. If common seal is not there, company secretary and one. If CS also is not there, 2 directors will sign. Correct? This is 46. 46 also tells if you are going to issue duplicate share certificate, then the same should be issued as follows. Duplicate share certificate, listed company, unlisted company. Listed company 45 days, unlisted company 90 days. Time limit to issue duplicate share certificate. When if the share is torn, some coffee fell, name went, whatever. Theoretically, it's a section. Practically, nobody follows. Can we proceed, guys? Next. 47 talks about voting rights. Simple. What is important over here? We have two types of shares. Equity share capital and preference share capital. Preference share capital, do they have voting rights? Generally, no. Equity shares, do they have voting rights? Yes. 1:1. Following, guys. But equity shareholders also have something called differential voting rights, where I can have one share and have 10,000 votes. Warren Buffett has this in his company. One share, 10,000 votes. How to issue differential voting rights? 43 Rule 4. We are going to see that next immediately. 43 Rule 4 is issue of differential voting rights. Very, very, very important for November 23 exams, because they have never tested this, and this is the only procedure which is worthy of a 6-mark question pending to be tested. That means it's waiting to come in November 23. Following, guys. Before I go there in a minute, preference shares, just to emphasize, no voting rights, but they can vote in some scenarios. When their rights are going to be affected, or for the decision of winding up, if anything affecting their rights, I'm changing rate from 9 to 10% or 10 to 8%, they can vote, or for the purpose of winding up, they can vote. Apart from that, in case of cumulative preference shares for 2 years, if dividend is not paid, then they will become, they don't become equity shareholders, they can vote for everything. This is all we studied in school. Sir, tell me what is important. 43 Rule 4, important for the exam. So I'm going to get through the procedures. How to issue differential voting rights. Simple, I can summarize the procedure in 2 lines, guys. 2 to 3 lines. First, you have to pass ordinary resolution through postal ballot. Don't worry, like how in the previous session, now you know what all needs explanatory statement. Does this need explanatory statement? Yes. Does this need explanatory statement, guys? Yes or no? Yes, because it's a special business. Now you don't have to learn what needs explanatory statement. Like that I will teach you when I go to meetings chapter, what all needs postal ballot. Okay, so for now, OR plus postal ballot, maximum of power with differential voting rights should be 74% of post issue. Total voting power, 74% of total voting power can only be differential voting rights. Not more, not less. Are you following? Only 75% of total issue can be what? Differential voting. And you also have to be authorized in AOA. So AOA plus ordinary resolution in postal ballot and maximum 74% of post issue capital. Now, we have a 3 years condition, we have a 5 years condition. The company in the last 3 years should not have defaulted in filing FSN. So, when you are writing this answer, imagine if you write, company has not defaulted in filing FS under section 137, annual under section 92. And also in the last 3 years, there should be no default in SEBI Act, SCRA Act, FEMA, RBI. So last 3 years, 2 defaults should not be there, correct? No default in filing FS, no default in filing annual return, and also in last 3 years, no default in SEBI, SCRA, FEMA or RBI Act. Last 5 years, what default? Basically, you should not default in everything. I will tell you what everything. Interest, dividend, repayment. What? Interest on deposits, interest on debentures, interest on loans. Wherever interest will come, write that. Dividend will come on shares, equity or preference shares. Once declared, there should not be any default. Repayment of what? Loan, debentures, deposit, loans, advances, also redemption of preference shares. Whatever you can write, guys, are you following? Hello? Yes, sir. So, in the last 5 years, no default in repaying interest on whatever it's there, dividend on shares, and no default in repayment of loan, advance, debenture, deposit, redemption of preference shares. Also related to employees, all statutory dues like PF, ESI, bonus, gratuity, all that also there should be no default. If any default is there, no differential voting right, because you are not able to follow law. Why you want more power? Are you following, guys? No default in all these. So again, what to remember, guys, for differential voting rights? Follow what resolution? Ordinary resolution in postal ballot authorized in AOA, maximum 74% of post issue capital. Last 3 years, no default in filing FSN annual return, also no default in SEBI, SCRA, FEMA and RBI. In last 5 years, no default in interest, debentures, deposits, loan, shares, repayment of all that, whatever is there, and statutory dues. In last 5 years. Then how to issue DVRs? 5 years should get over, or the 3 years should get over. Now, next 3 sections which is going to come in almost every procedure. 88, 102, 134, which is going to come in almost every procedure, guys. That means I can remember. 102, I already told you what is that. So you have to write, company has to give explanatory statement as to why we are issuing this. Next, similarly 88, what is 88? Register of members. Basically, every company should maintain register of members for every issue. Buyback, 1 register. Deposits, 1 register. Debenture, 1 register. Sweat equity shares, register. Like this, DVRs have a register. In that register, I will mention what? Who are all getting DVRs. 134 also will come in every section, both report. So basically, it's 3 points. Company has to maintain register of members who has DVRs. Company has to give explanatory statement for issuing DVRs. Company has to give reason and justification in both report. And last 2 points. Sir, I have DVR, differential voting rights. Am I superior? Yes, in terms of voting. But other rights like bonus, rights, dividend are same. Because shareholder, you can't go to lunch and tell in AGM, I am having DVR, give me 2 plates. All other rights are same. So, all other rights are same, but we write the word pari passu instead of same. All other rights are pari passu. Then you can't convert, existing shares cannot be converted to, conversion not possible, or DVRs also cannot be converted to. That means what is it trying to say? If you want to issue DVRs, make a new issue. That's it. 43 rule 4 is over. Beautiful procedure. Let me again revise once from the top and go to next section. What is the approval needed? Article should authorize ordinary resolution in postal ballot, maximum 74% of post issue capital. Then last 3 years, no default in filing FS or annual return, no default in SEBI, SCRA, FEMA, RBI. No default in repayment of interest on whatever is there, deposits, debentures, loan. No default in dividend on shares, and no default in repayment of loan, debentures, deposits, redemption of preference shares. No default in statutory dues. Write everything, guys. Okay, everything means default wherever it can come. Then 3 sections: 88, 102, 134. Register of members. 102, explanatory statement. 134, both report. Are you following, guys? Then all other rights will remain the same. Pari passu. Existing cannot be converted to DVRs. DVR to existing. Following this, section 43, rule 4. 43, rule 4 talks about differential voting rights. Voting rights is section 47. Now going to section 48. Are you all with me, guys? for everybody before the offline students, for whoever feeling cold can go back. It will not be cold if you go back. Whoever feels you need AC, come front. That is the technique. Okay. Fine. Otherwise, nothing else can be done because we turn the AC off, it will become too warm. So you have to manage. No, we can't do anything. After very cold, we'll turn it off for some time. Let's come back to the subject, guys. Recording, ignore that. You're in the house live. Okay. 48 talks about variation of shareholders' rights. What do you mean by this? I am changing my rights. What kind of rights? Apart from voting rights, other rights. Removing the right of receiving bonus. Are you following? Like that, see, changing voting rights, 43 rule 4. Other rights will come here. Any other right, variation of shareholders can be noticed, whatever, if you want to change it. Are you follow, guys? Now, what is the procedure here? That power should be given, authorized in AOA or MOA. If it's not there here, company has to pass a special resolution or basically to alter the, that will come to that later actually. 1 second. So we'll come to that next line. So either AOA and MOA should authorize or the terms of issue should allow such change. So first power, source, always source. To do something, what is the source of power? Write that point first. Don't write, company has to pass special resolution in the last line. In this session, I will also focus on presentation. One answer, if time is there, I will dictate. If you have answers, end of the class, show it to me here. Okay, fine, I will focus on presentation. So, source, MOA and AOA and terms of issue. Procedure is simple. Company has to pass. That's it. Or get consent of 3/4 of members in writing. Get consent 3/4 in writing. That's it. Either pass SR or get consent of 3/4 of members in. If of which shareholders? Of, let's say I have 3 types of shares, ABC, 10,000 shares of 10 each, 5,000 shares of 5 each, 7,000 shares of 10 each, 5 paid up. So, whose rights I am changing? B. They should pass a resolution. No need everyone to pass. Are you following, guys? However, if I am doing something which is going to affect others' rights, my dividend is 8% preference, his is 9%. I am changing 8 to 10% for me. Isn't that affecting somebody else's rights? So, if your variation is going to affect other class, then get special resolution, or in other words, in easier way, get 3/4 consent of that class. That's it. That's all. Procedure over, guys. Simple. What's the procedure? AOA and MOA should authorize or terms of issue should provide. For variation right of that class, pass SR or 3/4 of consent in. Is it affecting some other class? Yes. Then additionally 3/4 of consent of that other class. Are you following, guys? Now after doing this, variation of shareholding rights comes to an end. Always there will be some fellows who will object. We are calling them dissenting. If one shareholder is objecting, ask him to get out. But if I have 10%, at least 1/10 of shareholders are dissenting, they can appeal to the within 21 days, basically 3 weeks, but don't write 3 weeks. So dissenting shareholders from the date of this resolution, SR, they can appeal to tribunal within 21 days. Once they appeal to tribunal within 21 days, what happens next? Tribunal will pass the order which company has to follow within 10 days. Order is not passed in 10 days. Hello. Tribunal can take 2 years also. Courts, you know how fast they are. So, once they pass the order, we have to follow within. That's it. This is for dissenting shareholders. Which section is this? 48. Simple. Terms of issue should authorize AOA, MOA. Resolution, SR of that class or 3/4 of members in that class, affecting some other class, 3/4 of consent of that class, dissenting shareholders, 1/10 will appeal tribunal within 21 days, order in 10 days. Yes. Order in 10 days? Where? Okay. Which one? This. You're saying this is 30. So appeal within 21. What's there in the book? In the book I gave itself. Sorry, then my bad. Very bad. Sorry guys. 30 days. Within 30 days, you will file the order has to be followed. That's why we have some students here. You're going to see and tell me, but I'll ensure it doesn't happen. 30 days. Are you following, guys? Clear. We have 10 days for a. Got it. Okay, yeah. It's different sections. Fine. Are you following, guys? Just one small correction. Everything else is same. You have to follow within 30 days. 10 is for different section. When we get there, we'll take it up. Clear, guys? What section is this? 48. Now, next 3 sections we'll get over in 3 minutes. 49, 50, 51. What is 49? Calls in uniform basis. 50 calls in. 51 payment of dividend. I'll explain simple, guys. 1 minute max per section. In school we studied making a call. Such a call that has to be made in a uniform basis. That means I can't ask shareholder A to pay, shareholder B not to pay. All the shareholders should pay. That means if there are 10,000 shares of 10 each, 7 paid up. If you are making call, ask everyone to pay 3. You can't selectively ask 100 shareholders to pay how much? 3. Everyone should pay on uniform basis. Clear, guys? That's it. 49 is that's it. 50 is whatever you studied in school and foundation. Can you pay calls in advance? Yes. Do you get voting rights for calls in advance? No. Do you get interest? As per Act, there is no interest. But as per AOA, default rule, if company wants, they can pay interest of how much? 12%. But generally, most companies pay. Are you following, guys? It's not in the Act, it's in the articles, table F. Next, dividend. Now, dividend, assume it's 10,000 shares into 10 each, rupees 7 paid up. Now, dividend is 12%. Is my dividend on face value or paid up value? Face value or paid up value? Company can choose. The company can choose as per articles. If they want, they can pay on face value. Otherwise, they can pay on. Logically, it's right to pay on paid up value because you paid so much, on that only you get return. But company can choose to pay on paid up value. I mean face value. Are you following, guys? In reality, these 3 sections are dead. These 3 sections come only when there is call. Today, while issuing, full money is paid up. But exam will not see all that. Anything can come. Are you following, guys? So 49, 50 and 51. Next is 52. It's what? Securities premium. I am not going to discuss. Can I use securities premium to buy a car, buy a house? They are not going to ask in exam. Answer for that is yes, sir. But that is money from securities premium. Securities premium account. Exam, what's going to come? The balance in securities premium account on the liability side. That account, that ledger can be used for what? Buyback, bonus, write-off, preliminary expense, again write-off, premium or discount on issue of shares or debentures, correct? Issue of shares or debentures. Last one, writing of premium on redemption. Writing of premium on redemption of debentures or preference shares. In exam, they asked 5 marks. What is the usage of SP? 5 points. Are you following, guys? 6 points, 5, whatever, 5 points. What is it? First, it can be used for bonus, can be used for writing off preliminary expense, can be used for writing off premium or discount on issue of shares or debentures, writing of premium on redemption of debentures or redemption of preference shares. Can I get premium on issuing shares for consideration other than cash? What is the entry for premium? Bank 120 to equity share capital, assuming face value is 10. 2 securities premium. Instead of bank, why can't I get plant and machinery? Yes, I can issue shares for consideration other than cash. One important thing which goes into accounts, premium, this one, premium on redemption of preference shares, even though the section allows, it says if a company is following accounting standards under 133, you would have seen in accounts redemption of preference shares chapter also. Securities premium cannot be used for writing off premium on redemption of preference shares. That means I have redemption of preference shares 55, buyback 68. Securities premium can be used here, cannot be used here. That's what we are seeing in accounts also. Reason is very simple. Who gave the premium? Equity shareholders. Used for equity shareholders. Preference shareholders never gave the premium. So you can't use for their redemption. Cross accounting you can't do. Following guys, next question. What if preference shareholders gave premium? They will never give because we don't issue preference shares on premium. We only redeem on premium. That's it. This is section 52. 53 and 54. All of you with me guys? Hello. Fast. 53 is what? Issuing shares at discount is void. You can't issue shares at discount. It has 2 exceptions. One, in a scheme of reconstruction, debt reconstruction. In a scheme of reconstruction, for those writing group 2, basically it is that internal, when company is doing internal reconstruction, they can issue shares at discount to creditors, debt, etc. The one more discount is issuing shares on ESOP, or basically issuing shares to employees. That only is next section 54. Sweaty equity shares. Are you following guys? So 53 issuing shares at discount is void. 54 you can issue shares on sweat equity basis. Recently they tested November 22 sweat equity shares. May 23 also. Yes, it came in. Startup came in November 22. Twice it came. So less important for November 23. Less important. So I'll quickly run through. I'm focusing the marathon for November 23 exam. That exam was important. So 54, let me quickly run through. Sweat equity shares will be issued for either directors or employees for their know-how and value addition. Employees, directors can be whole-time director or part-time director. Employee can be employee of this company or employee of holding or subsidiary. Such a shares which are issued should have a lock-in period of 3 years of lock-in period. What are the other procedures here? Again, the same points will repeat. It repeats, guys. What is 88? Register of members. Here we call it register of members, details of sweat equity shares. Who all got sweat equity shares? 1 or 2? Therefore, what resolution? What business? Special business. This has 134. Same repeat. So you have to write 88, 1 or 2 explanatory statement with special resolution, and 134 board's report. Are you following, guys? Hello. Then next procedure. All other rights are same. That same pari passu point. From there we are repeating all the points. Now new point. What is the new point? You need to get a valuation report and follow guidance note issued by ICAI for the purpose of accounting. So again let me revise, guys. Sweat equity shares. What is the procedure? Can be issued to directors or employees of the company holding or subsidiary, permanent employees or holding and subsidiary. Lock-in period 3 years. 88 register of members. 1 or 2 explanatory statement with special resolution. 134 both report. All other rights are same, pari passu. Give a valuation report with details of why I am issuing at this price, justification, and follow guidance note on sweat equity for accounting purpose. Lastly, how much percentage of sweat equity shares can be issued? At any point, overall sweat equity shares should not exceed 25% of overall paid up share capital. But this limit is 50% in case of a startup company, and we have 15% is the maximum issue in one financial year, or 5 crores, whichever is higher. Are you following, guys? Clear? So maximum sweat equity shares I can issue in 1 year is 15% or 5 crores of latest paid up share capital, whichever is higher. Overall of my, this is basically post issue. These percentage should be applied post issue. It's all post issue. Even the differential voting rate 74 is post issue capital. That means after issuing. Here 25% of overall paid up share capital at any point of time. 15% is that year and 50% is for a startup. Startup means more employees give more shares. Are you following, guys? Which section? 54. Are you able to recollect, guys? Hello. The share capital chapter has lot of procedures. So I won't do it continuously. Suddenly I'll jump to some other chapter, finish and come back. Are you following, guys? 55 is simple, guys. Issue and redemption of, same as accounting. For issuing preference shares, AOA should authorized. Mainly we are focusing on redemption of preference shares. Here key points: transfer to CRR the face value of shares that are redeemed. Why CRR and all? Not in this class. Following, guys. Source for redemption: free reserves or securities premium subject to 133. So mainly I will use only free reserves. Generally SPS not allowed. Can I use revaluation reserve? Revaluation reserve cannot be used for anything in any section. Buyback, no. Dividend, no. Redemption of preference shares, no. Bonus, no. Everybody has discriminated revaluation reserve. It's alone. It's depressed in the corner. Okay. Following, clear. So now redemption, CRR and free reserves. Are you following, guys? Hello. Now what is important here which we don't know? Other things now you know how to issue. You can use proceeds of a, I can make a new issue and use that proceeds for redemption. What is important which many of you might miss here is there is a concept called deemed redemption. What is deemed redemption? Deemed redemption basically means I am not able to redeem by paying. So I will issue new shares instead of old shares. So there are existing 1 lakh, 8%, 1 lakh preference shares of 100. To redeem this, I will maybe issue 9%, 1 lakh preference shares of 100. Are you following, guys? Understanding? This is called deemed redemption. For this deemed redemption, you need permission of tribunal plus 3/4 of members consent. Are you following, guys? So for doing deemed redemption, get tribunal permission and 3/4 of members consent. Again, we will have some shareholders who are dissenting shareholders. Give them exit opportunity. I don't want this. Give them exit opportunity. So simple. Mainly in redemption, deemed redemption, if you are not able to repay, give preference shares or preference shares. Entry will be old preference share capital account debit to new preference shares. Percentage will change. Get permission of tribunal, 3/4 of members consent and exit opportunity. Are you following us? What section is this? 55. Now quickly I'll run through some C category procedure sections. They have never tested in exam, so I'll hardly spend few minutes. When I'm saying not never tested for exam, don't skip. Because we have only one day, hardly 7-8 hours, I'm focusing on what is important. 56, 57, 58, 59. Okay. 59 is simple. Rectification of register of members. Whenever there is any name change or you want to change the name of your thing or they forgot to add your name, you can ask the company and they will do rectification. Otherwise, you can appeal to tribunal and they will pass an order. Company has to rectify within how many days? This only is 10 days where I wrote there, but leave it. Here rectification within 10 days from the time of order of tribunal. Are you following, guys? 56, 57, 58. 58 talks about appeal, but before that 56 talks about what? Transfer and transmission of shares. Never tested because today we don't transfer in manual, but still we have a transferor, we have a transferee, we have ITC company, or let's say we have Mohit, we have Charan. Now Mohit wants to sell his shares to Charan. He can't do a GPay transfer. First he has to inform the company in a form called transfer deed. Along with transfer deed, he has to attach share certificate. So with the transfer deed, Mohit who wants to sell the share will attach the transfer deed and give it to the company. This transfer deed should be signed by both Mohit and Charan. Both the parties will sign. This has to be given to company within 60 days from the date of signing. But I can give even after 60 days. But Mohit, the transferor, should give an indemnity. That indemnity that I am not responsible if something bad happens or if some other claim comes. Following, guys. Then company will check with the other party, all the checking they'll do, and then they'll confirm the transfer. This is section 56, transfer. What is transmission? When, let's say, when a person, let's say father dies, then the shares will go to the son or daughter, to legal heirs. If there are no legal heirs, legal representative, automatic transfer of shares, inheritance. Are you following, guys? Clear? Next. Now, within these sections, we have a concept called forced transfer. Very simple. I don't want to spend much time. A, B, C, D. A had his share certificate in the bag. B stole it, did forgery and sold it to C. C again sold it to D in good faith. Now later we found out there is forgery. So the shares will be cancelled in everybody's name. And whose name will be restored? Original shareholder. Who will compensate D? C. Who will compensate C? So person who did forgery will compensate everybody and the company. That's it. Are you following, guys? So forced transfer, original person will get his share back. Remember, forgery in entire act here and negotiable instrument act, forgery is not a question of wrong consent. It's a question of absence of consent. So when there is no consent, transaction itself will become void. Clear, guys? This is 56. Now 57, 58 is simple, guys. Appeal. When Mohit gave the share certificate to company, company did not register. First of all, transferring manually is not that today. So when they are not registering, you can appeal to the tribunal for what? Registration of shares. There are some time limits, guys. You have 60 days, 30 days, then 90 days and 60 days, some time limit, not that important. Basically, the person aggrieved party can appeal to the tribunal. Tribunal will pass an order. If you are not happy, again you can appeal. Time limit for private and public company is different. For public company, you have private you have extra 30 days. That's it. Are you following, guys? Appeal timelines. This is appeal. They have never tested transfer transmission. Leave about appeal. It's there in syllabus. Have a quick look. One day you have a quick look. I don't want to spend much time. Don't skip because I told. Just have a quick look. That's it. Fine. So we're done with section 56, 57, 58. 59 is important. Rectification of name, order pass, rectify within 10 days. 60, not there. 60 is not there, guys. 61 to 72, one question will mandatory come in exam. 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71. I am not doing everything continuously now, otherwise it will take some time. I will do a few sections, go to next chapter again, come back here. Following guys, mandatory one will come. First let me remove what all is not there in syllabus. 65, sorry, yeah, 72. These two are not in syllabus, leave it. All the remaining sections you know. 61 is alteration of share capital. 62 is rights. 63 bonus. 64 not that important, filing with notice to ROC. 66 reduction of share capital. 67 prohibition of giving financial assistance for purpose of buyback. 68 buyback. 69 CRR. 70 prohibition of buyback. 71 only one section for debentures. I am not doing everything continuously. 61, 63 came in latest May 23 for 10 marks. Alteration 5 marks, bonus 5 marks. So what becomes important for buyback also came just a few attempts back. So 66 becomes important. 62 is important for November 23 because in 62 rights we have a very important concept. 62 subsection 3 and 4 and reduction is important. So first let me quickly finish off alteration. Everybody knows what's alteration. Whenever company wants to increase the authorized share capital, do a subdivide or stock split, or they want to do a consolidation, or they want to cancel unissued shares, or they want to convert share to stock and vice versa. Let me quickly tell you what is authorized capital. You know, increasing the capital clause in MOA. Subdivide 10,000 shares of 100 each is becoming 1 lakh shares of 10. Consolidate 1 lakh shares of 10 each is becoming 10,000 shares of 100. Cancel unissued shares, not issued, cancel. Conversion of share to stock, 1 lakh shares of 10 each will become 1 share of 1 lakh. It's like, what is the meaning of share? I have a cake, we are all going to cut today and celebrate. You will get a small piece, that's your share. Let's say anyone's birthday today. No, let's say it's Sou's birthday. She's getting the cake. She's saying nobody is going to eat. Full cake is for me. Now, then that cake is fully for her. Therefore, no share. Fully it's a stock. Are you following? Sharon is getting a 5 kg cake. No one's going to touch. Fully for me. Then full stock. So basically when this happens, when Elon Musk purchased Twitter, he purchased 100%. So convert the shares to stock. Fully for himself. That's it. To do this, section 61 pass an ordinary resolution. Recently tested. Okay. Fine guys. 62 and 63. What is 62? Rights issue. Rights issue, let me focus on timelines. Offer, open, offer, closing. Once I give rights issue is made to whom guys? Existing shareholders. You have to accept or reject within minimum time limit, maximum time limit. Minimum time limit is, maximum is 30. 7, just check the amendment. Yeah, amended to 7. Okay, it was something else. I don't want to tell the number in recording. So, offer opening and closing. Minimum is 7 days, maximum 30 days. Are you following guys? Clear? That means once you get the rights offer, you have to accept within 7 to 30 days. Who will decide that number? Company. It won't be 7 to 30. Company can tell, reply within 10 days or reply within 15 days. The time can be anywhere, decision can be 7 to 30 days. Are you following guys? What resolution for rights issue? No resolution. Why? Rights issue, once you get, you have the right to accept or reject. That itself is resolution. Otherwise, you will pass ordinary resolution. Again, you will accept and reject double time. So, no resolution for rights, only board resolution. No resolution for rights issue. Only thing where there is no resolution. Then, minimum is 7 days. Maximum 30 days for rights issue. 7 is an amendment. Following, guys. Clear? Then, other provisions are simple procedures. Rights issue, you can accept, reject or do renunciation. Transfer to somebody else. What is key in rights? 62 subsection 3 4. Follow, guys. Important for November 23 exam. Only those things I am spending a lot of time. Whenever a company gives loan to government or issues debentures or takes loan, guys. Basically, takes loan, not gives loan. When company is taking loan from government or taking loan from bank or issuing debentures to public, if they are unable to repay the debentures or unable to repay the loan, then what will happen? This debentures can be converted to equity, or this loan can be converted to equity if the terms of issue provide for the same. Are you following, guys? While issuing loan itself, I should tell, if I don't repay, loan will be converted to equity. While issuing debentures, I should tell, if I don't repay, it will be converted to equity. Then they can exercise that power. But for loan from government, no need terms of issue. Whenever the government feels the company is not being managed properly or for the benefit of public, they can convert this loan to equity and take over the management of the company. Now, one important point here is, sir, my paid up share, look at the balance sheet. This is what I am expecting in exam. Paid up share capital is 100. Authorized share capital is 150. Loan from government is 200. Can I convert the loan to equity? Hello? Yes. If I convert this, my new paid up share capital will become, which is more than authorized. So, company is saying to government, hey, you can't convert. Government says in 62 subsection 4, it says, such conversion of loan to capital is deemed to increase the authorized capital. You can't do anything. It's a deemed increase in authorized. This deemed increase is not there for debentures or loan. It's there only for government. Are you following? Then of course you will have aggrieved party can appeal to tribunal. Tribunal will pass an order. That's it. Are you following, guys? This concept never tested, worthy of being tested. Are you following, guys? Clear? It's part of a syllabus, never tested. So mark it as important for November 23. Clear? Conversion of loan to equity from a government loan. This is 62 subsection 3 and 4. Clear, guys? Can I issue rights shares to employees? Yes. Follow sweat equity shares section. Can I issue rights shares to selective individuals? It becomes what? Private placement. Follow section 42. Can preference shareholders issue rights shares? Yes. There is nowhere it said who can issue. I can issue to preference shareholders. Following, guys. Clear? 62 over. 63 talks about what? Bonus. Came in latest exam, so let me be extremely quick. Bonus shares can be issued once you pass what resolution? Ordinary or special? Ordinary resolution. Simple, because I am not collecting money, I am giving for free. So, ordinary resolution. Sources, free reserves, SP or CRR. First use CRR. Bonus shares can be made only for, even buyback can be only for fully paid up. Logic is, if it's partly paid up, liability will double. Okay. Then, bonus shares cannot be issued in lieu of, you can't declare dividend until take bonus shares. You can't issue bonus shares if there is any statutory dues regarding employees which is pending, or loan from bank or financial institution, loan or interest not repaid to bank or financial institution is pending, or statutory dues for employees pending. You can't issue what, guys? Bonus charge. That's it. Section number 63. Are you following, guys? Hello? Came in latest exams, so I'm not emphasizing much. 64 is not a big deal. You have to intimate ROC within 30 days whenever there is an increase in change in MOA, basically increase in authorized share capital. For example, in previous section, government converted loan to equity, authorized share capital increased, intimate ROC. Even if the authorized capital decreases, intimate ROC. That's it. That's all section. Intimate within whatever time. Fine. Done, guys. This section 64. Again, those who don't know section numbers, leave it. Are you recollecting the provision? That's all. Okay. Important sections we will focus. Here, what all you should remember. Now, 65 is not that. Let me do a detour and go to dividend chapter quickly. And again, come back here. Dividend is simple. 123. Okay. And 123 subsection 3 is interim dividend. Let me give one timeline to finish this chapter. Once dividend is declared, I can declare dividend either using current year profits, previous year profits, or combination of both, or money guaranteed by government, central or state. Whenever I am using previous year profits, simple. Whenever I am going to use previous year profits, you have to follow rules. How many rules? That is rule 3 of section 123. See, guys, dividend chapter is only 5 sections. Every exam, do you have one question from dividend? Mandatory 5 marks, 5 sections. Why can't you remember? One will definitely come. So, section 123 is declaration of dividend. Declare from current year profits, previous year, or combination government guarantee. If you are using previous year, follow the 3 rules. I will come to the 3 rules in a bit. Once you declare, you have to pay with transfer to scheduled bank account within. Again, once you declare, inclusive of this 5 days, you have to pay within. So, once you declare, transfer to separate bank account within. Inclusive of 5 days, pay within. If you fail to pay within 30 days, or I paid but the shareholder is not collected because the address changed, whatever unclaimed, then transfer to unpaid dividend account within the next 7 days. I will transfer to, at this point, section 124 starts. Transferring to unpaid dividend account, section 124 is going to start. Once you transfer to unpaid dividend account, from this day, within the next 90 days from the date of transferring to unpaid dividend. It's not 90 days from end of 7 days. Sir, I transferred on 2nd day itself. Then 90 starts from end of 2nd day. Are you following, guys? So, within 90 days, you need to publish on the website basically a report. Who are the shareholders? How much is unpaid? What is the last known email? All of that. Address null you won't publish on website. Last known contacts will be published. There is one more amendment. This time it says, whenever you publish register of members detail, don't publish the members' personal data. Clear, guys? Okay, fine. So, within 90 days publish in website. So, basically money came to unpaid dividend account, section 124 within 7 days. Transfer within. If you don't transfer within 7 days, interest is. I already discussed this 12%. In private placement, 42. Because this is 124, opposite is 42. Money will remain in unpaid dividend account for a total period of It's not 7 years after expiry of 90. Overall, in this account, money will remain for. After 7 years also, nobody is claiming. Then I will transfer to IEPF, that is section. Goes in order, guys. So, it remains in IEPF forever. Are you following, guys? So, what are the timelines? Once dividend declared, pay within. Sorry, declare, transfer to separate bank account within. Pay within. Then transfer unpaid dividend account within. Money, and within the next 90 days, prepare a report. And then this money will stay in this account for 7 years. After 7 years, it goes to IEPF. This 5 days is section 123. Pay within 30 days, 123. The minute it's not paid, unpaid dividend comes 124. After 7 years, 125. Now let's look at these rules. 3 rules, fairly simple. Follow, guys. What are the 3 rules that we have? Rule number 1, average rule. The rate of dividend should not exceed average of last 3 years. The amount I can withdraw is, imagine you have savings, guys. Do you withdraw all the savings? You withdraw some. If you have 1 lakh savings, you go for a trip, you might withdraw 10,000 or 20,000 rupees maximum. So you can withdraw here 10% of paid up share capital plus. But after withdrawing, first set off with any current year loss or accumulated loss or any unabsorbed. Then only I can use. Withdraw, then set off. Are you following? Last is balance rule. In your house, if there's rice, there will always be some stock left. In your wallet, at least 1 rupee coin you will keep some balance. So, after paying dividend, there should be the balance in free reserves. Should be at least, basically after payment, not before. After payment should be at least 15% of paid up share capital. This paid up share capital includes only equity or preference. Equity plus preference. It's both equity and, are you following, guys? Because dividend is paid for both equity and preference. Simple. Okay. So what are the 3 rules? Which rule is this? Rule number. See, there are 3 rules. Number also is rule 3. So you will not forget. Rule 3 of section 123. Declaration of dividend rules. 123 also 3. So 123 3 rules. Average of last 3 years. Amount to withdraw 10% of paid up share capital and free reserves. Then you adjust with cut off current year losses or previous year losses. Then balance should be at least 15% of paid up share. So what is section 123? Declaration of dividend. What is 123? Rule 3? 3 rules. What is 123? Subsection 3? Interim dividend. Full of 3. 123 declaration of dividend. 123 subsection 3 interim dividend. 123 rule 3. 3 rules. 124 unpaid dividend account. Unpaid dividend account. 125 IEPF. This only we saw. Transfer within 7 days, within 90 days reported after 7 years. IEPF. What is IEPF? Imagine IEPF to be a bank account. Like a bank account, IEPF account, how money comes in, how money goes out. How money comes in, always 7 years is the rule for IEPF. If dividend is paid 7 years over, nobody claim. Debenture interest paid 7 years over, nobody claim. Redemption of shares, buyback of shares, redemption of debentures, all these things which I have to pay back to stakeholders, nobody came to collect. Wait for transfer to. How can I use the money? Can the government officials take a flight, go to Bali, enjoy vacation and come back? No. This money, look at the section, Investor Education Protection Fund, used for awareness of employees, for the benefit of employees. Are you following, guys? For the good of employees. Are you understanding, guys? Hello? It's for the employees. Sorry, investors. I'm so sorry. For the investors. Sorry, it's for the investors. Benefit of the investors, shareholders. Have you seen ads? Mutual fund subject to market risk. Like that, promotion activities. Okay. Sometimes some shareholders would have lost money because of some forgery or some scam happened, Satyam scam. All the shareholders lost money. That time government will compensate these people using this money. Okay, fine. Nobody, you lost 10 lakhs. Take 1 lakh from my side. Vote for me. Are you following, guys? Understanding? Clear? Following, guys? Clear? Marvin, edit that. Okay. Now, can we proceed, guys? This is section 125. One more thing, how money comes in. Somebody did fraud and took shares, money which doesn't belong to him. Surrender that money to IEPF. That's it. Money comes in, money goes out. 125 done. 2 more sections, dividend chapter will get over. Are you following, guys? Okay. In 124, unpaid dividend account, interest is how much? Private placement interest, 12%. Next to 126, 127, chapter is over. 126, everybody knows when I write the word abeyance. Dividend will be, or whenever there is a dispute, Mohit wants to transfer the shares to Charan. Now, new shareholder, Aravind goes and tells, this is my shares. Mohit gave to me. 3 of them are fighting. Company tells, you fight and come back. Till then, the shares will be kept on abeyance. It will be kept on hold. Whatever benefits that come from that shares, what are the benefits? Dividend, rights and will be kept in abeyance. Are you following, guys? Dividend will be kept in abeyance, means it will be transferred to 124, unpaid dividend account. So, dividend will not be paid, it will go to unpaid dividend account. Rights and bonus will be kept in abeyance. Now, look at this. What section is this? Loudly, what section? Recording. Recording students who are watching in the house. We have 50 students here approximately. Live, everybody are repeating. Those who are watching recording, repeat in the house. Okay. Now, 126. This is 26. Opposite is what? This is 1 plus 1. 63. 62 is rights. 63 is bonus. So, abeyance of dividend, rights and bonus. So, in that section, we will reverse the number. Rights is 62. Bonus is 63. Trying to give you techniques to remember, guys. Are you following? So, now you remember 3 sections. 126. Reverse 62. Rights 63. Bonus. Because 126 abeyance talks about rights and bonus. We are learning section numbers with stories. So, you will at least remember 30 today. Are you following? Key sections? Okay. Remember 62. If you don't remember 63 also, I don't care for this exam. Because they asked in May 23. If it comes again, don't ask me. But generally guys, I'm saying. So, 62 is important because 62 is subsection 4. Fine. 127. After declaring, I did not pay dividend. After declaring, I did not pay. That means 30 days you should pay. Within 30 days, you did not pay. Simple. Interest and penalty and imprisonment. Interest is, what's the section number? 1 plus 7, 8, 18%. Penalty section. Dividend, there are 2 sections. 124, 42, 12%. 127, punishing you for not paying dividend, 18%. Apart from that, you will be imprisoned up to this penalty, remember guys. This penalty section, remember. I will tell you what all is important. Imprisoned up to 2 years and fine of rupees per day of default. Who will be imprisoned? Directors or whoever is responsible, guys. Clear, guys? Are you following? This penalty will be paid by company. Interest, all of that. Clear, guys? 127. But 127 also has some exceptions. No need to pay penalty or interest. Basically, if it's not the company's fault. For example, one is no need to pay due to operation of COVID came, lockdown. I have to pay dividend in post. How I will put post? No, operation of law. Second, lawfully, shareholder should give me call money. I have to give you dividend, adjust. Next, just now we saw 126. Abeyance, because of any dispute. So if there is any dispute, don't pay dividend. Next, shareholder gave some. This only they keep testing in exam. This or this lawfully adjusted. Shareholder told, give me instead of dividend, Bitcoin. Can I follow? Shareholder is saying dividend don't give. Instead of cash, you give me Bitcoin or give me gold. Company is saying, I can't follow this instruction, don't ask me. So, if shareholder gives instruction, if company is not able to follow, they have to inform the shareholder that I can't follow, then no penalty. You gave instruction, I didn't inform, then there is penalty. And last one, any other reason, not because of the fault of company. So what are the exceptions, guys? Operation of law, lawfully adjusted, dispute 126, instructions given not followed, other reason. You don't have to mug up these 5 points. Hello. Law, very only procedures, share capital chapter procedures, deposit chapter procedures, debenture section 71, change of registered office. That's all you have to mug up procedure. Everything else, remember the concept. Any one can be a case study question. Following, guys, are you all with me? Hello. So these are the exceptions. This section 127. So we are done with dividend chapter. 123, declaration of dividend. 123 subsection 3, interim dividend. 123 rule 3, 3 rules. 124, unpaid dividend. 125, IEPF. 126, abeyance. 127, punishment. So 123 subsection 3, interim dividend is a dividend paid during the year, or in other words, dividend paid between two AGMs. For this also, interim dividend can be paid using current year profits, previous year profits, or no government or previous year. That's it. No government won't guarantee for interim dividend. Interim dividend, all the procedures are applicable. Only one change follow. This is the only difference. Interim dividend also was tested in the latest May 23 exam with a combination of final dividend. Follow. Interim dividend is declared during the year. So we have Q1, Q2, Q3, Q4. Q means quarter 1, which is April, May, June, October to December. Let's say I am declaring dividend in Q3. How do I know profits? I will check profits of Q1 and only Q1 and company has current year profits. Both Q1 to Q2 together. Declare how much ever interim dividend you want. No limit. Whatever I want. Are you following? Clear, guys? No limit. I can use my full savings also and declare dividend. Are you following? Full reserves can be used if current year even 5 rupees profit. If my current year Q1 and Q2 together is a loss, or I don't have adequate, it's a loss basically, then I have to go to the rules. If I am declaring in Q3, if Q1 plus Q2 is loss, both put together, Q1 profit sir, Q2 loss, set off total. If it's a loss, you have only one rule. Rule 1. What is that? Dividend should not exceed average of last 3 years. The rate, average rate of last 3 years. That's it. No rule 2, no rule 3. Are you following, guys? This is the only difference for interim dividend. With this, I can comfortably tell dividend chapter is done. So again, guys, with me revise 123. In the house, repeat, guys. 123. Declaration of dividend. 123.3. Interim dividend. 123. Rule 3. 3 rules. 124. 125. IEPF. 126. 127. Today, you are going to revise the concepts and remember 30 sections. Dividend, remember all. From this, 5 marks will come in exam. Is it worth remembering these 5 sections, guys? Okay. Now, let's see what all sections, before I go to next section, what all we remember today. I am not going to make you mug up section 18, section 2, I don't care. important sections for exam. Put that effort. If you're spending 7 hours, 8 hours today watching this marathon recording, this video, put that effort to remember those section numbers. It will add so much value in presentation. Yes, not mandatory in exam to remember section numbers. ICAI doesn't mandate. But you are competing with lakhs of people writing the exam. So you should stand out. You can't write, this is my GPay number, message me. You need to stand out with section numbers. Okay, don't do that, guys. If you do that, debarred from exams. Okay, so section number 1 is title, leave that. 285, small company. 114, ordinary and special. 117, intimate ROC within 30 days. Put that effort. MJD 14. 92, annual return. 137, filing of FS. 102, since 102 comes, 88 and 134 comes to that. 88, register of members. 102, explanatory statement. 134, go through. 25, team prospectus. 50, calls in advance. 100, EGM. If 100 is EGM, 96 is EGM. Following, guys. Next, 123, declaration of dividend. 123, subsection 3, interim. 124, unpaid dividend account. 123, rule 3, 3 rules. 125, IEPF. 126, abeyance. 62, rights. 126, opposite. 62, rights. 63, 127, let's again do dividend in reverse. 127, punishment. 126, abeyance. 62, rights. 63, bonus. 125, 124. So 124 unpaid means 42 is private placement. 124 and 42, interest is 12%. 123, subsection 3, 123, rule 3, 43, rule 4, differential voting rights, important for your exam. That's why I'm pushing that section. 43, rule 4, differential voting rights, important for which exam? November 23, guys. Okay. If you're watching for some other attempt marathon, concept will be same, but I am not responsible if there's any amendment. Following, clear, all of you with me? Hello, guys. Done. This is, so you already have learned all these sections. How many of you have learned all these sections newly today? Good job. I will remember, recollect, clear, right? Little effort. I will not send you home until you tell me with these sections today. Door will be locked. Okay. For offline students, recording students, promise yourself and you will not sleep today until this, plus some more are coming. For 25-30 sections, you should not sleep today. Okay. Fine. Let's do the next set of sections. Then I'll focus on presentation also before lunch. Fine. So we stopped in share capital chapter. Still 65 we did. I will do the rest later. I will do today only before lunch break. I'm just doing a small detour. What is pending is 66, 67, 68, 69, 70, 71, 72. Not there. Yeah. Just checking if you guys are aware. 72 is not there. I will come back to this in this same video, this session. Lunch break only after this. But before that, I'm just going to go to next set of sections. 73, 71, we will do debentures also. Basically, 70 series are sections involving debt, deposits, debentures, charge. So let's finish off all of that. Okay. Yeah, you turn it off again, put it on sometime if you want. How will I off? You should only off. Fine. Don't worry, Elon Musk is bringing Neuralink. If you put the chip in the head, you think AC off, na, it'll off. Okay. Wait for that. Now, see, Charan has planned and is coming sweater. He knows. Okay. I should have put the message. Bring sweater, guys. Fine. Let's proceed, guys. Let me start and close deposits and charges and debentures now. Next 1 hour. Okay. Let me finish off deposits first. Simple chapter 73, 74, 75, 76, 76A. Deposits. I'm going to go focus only on important areas here. 76A is penalty section. If you don't follow sections, penalty. Go read that. That is a penalty. Important penalty section. Deposits. 75 not in syllabus. 74 also very, very less important. C plus category. What they are saying, if you accepted deposits in old act, Companies Act 1956, now repay within 3 years. It's there in the book. We call it as transitional provision. It was relevant till 2017-18, not now. That's it. So basically, deposits chapter is only 2 sections, guys. Only what? 2 sections. 73 and I will prepare one table which will summarize this whole chapter and deposits will come to an end. Okay. Now, who can issue deposits? Either it can be a private company or it can be a private or public. Are you following, guys? Now, issuing deposits from members or issuing from public. First, let me finish the limits. Then I will tell you what's a deposit, what's not a deposit. Okay. Only 2 questions always keep coming in deposits. Either limits and procedure or it's a deposit or not a deposit. Following, guys. So, private company can issue deposits from members 100% of some X. We'll write what that X is later. They can issue how much? 100%. Can private company issue deposits from public? 0. Not applicable. You can't issue. So, basically, if you are issuing deposits from members, that is section 73. This is 73. Are you following, guys? Can public company issue deposits from members? From public, but not all companies. So, public companies are now classified into non-eligible and eligible. I will tell you what is that later. Non-eligible company can it get from public? No. So, therefore, non-eligible public companies again section 73 is in simple deposit from members. Deposit from members. What is deposit, sir? Very simple. How you go to bank and put FD? You can go to and put same FD with company like Bajaj Finance. Clear? Next. So, in non-eligible public company, from members, they can raise up to 35% of X. What is the X? I will tell you in a few minutes. Eligible public company, from public, they can raise how much? 25. But overall 35. Therefore, from members. But this ratio can change. That means, so follow, guys, let's summarize. Private company from members, how much I can raise? 100% of something. From public? No. Public company is classified into eligible and non-eligible company can raise maximum 35% of something. Eligible also can raise only 35% overall. But there's a subclassification. From public 25. Therefore, from members can I raise 20? Then public will be 15%. From public can I raise 5%? Then from members will be. So, within this I can play around with the ratio, but from public maximum is. Are you following, guys? This is for which company? Eligible. I can also be I can also be an eligible government company. So if I am an eligible government company, I can raise 35% overall from members and public in any ratio. That means here it can be 35, here it can be 35, here it can be my wish, any ratio. Are you following, guys? Okay, sir, this percentage of what, sir? You are saying percentage of what? It's a that X, that percentage of paid up share capital plus free reserves plus all above percentage. He's trying to say this only is shareholders' funds. You can't raise beyond this as deposits up to a percentage. Are you following, guys? So this is my summary table. If I have to see. So again, let's revise. Private company from members can raise 100% of paid up share capital plus free reserves plus. From public, which section? 73. Public company, non-eligible, section 73. From members, 35. From public, eligible public company. From members, 10. From public, 25. I can split in this ratio. Following, guys. Eligible government company, 35% in any ratio. All this percentage of paid up share capital plus free reserves plus SP. So where 76 is coming in this chart, whenever the word eligible comes, whenever you raise money from public, it comes. Following, whether it's 73 or 76, public or members, few common rules. The tenure of deposits period is 6 months, 36 months. Not less than 6 months maximum. Can it be less than 6 months? In certain cases, yes. Then it's 3 months to 6 months. But above we saw percentage 100, 35, 25. Such short-term deposits cannot be more than that 10% of what? Paid up share capital plus free reserves plus securities premium. Are you following, guys? Hello? Easy? Now, next thing, what's an eligible company? Next, that means which company can raise from public? They have net worth and turnover. Turnover is 100, 500 crores. Net worth of paid up share capital. Or an. Or. Able to follow, guys? Eligible company is a company. It first should be a public company, guys. A public company plus either net worth is more than 100 crores or turnover is more than or equal to 500 crores. We call it an eligible public company. So you know what's an eligible public company? How much they can raise from public? 25%. Government can raise 35%. Non-eligible company, you have limits. Whether eligible or non-eligible, time limit is this. Normal 6 months to 36, otherwise 3 months to 6 months. Are you following, guys? Then lastly, private companies saying I am not getting money from public. I am getting only from my members. Why are you giving me limit of 100% of paid up share capital plus? So Act told your question is valid. I will remove this limit. You can raise even 10,000% whatever you want if you satisfy any of this. Either you are a, they say startup means startup for 10 years. Why, sir? After 10 years also if I call I am a startup, then what are you doing? So startup is for 10 years. Then or any other private company which satisfies the following conditions. What is that? It should not be a subsidiary of holding of any other company. That means I am an independent standalone company. Then our favorite point, no default in filing FSR. Following, guys. Then next point is it should not have invested in borrowings. The borrowing should not exceed 2 times paid up share capital or 50 crores, whichever is less. Let me explain this point alone, because these 3 exceptions, same exceptions of private company, will come in one more place. 67, prohibition of giving financial assistance, loan to employees. Remember, loan to employees for buying shares. Employees can be given loan up to 6 months. Salary 6 months. That provision is not applicable for a private company if it satisfies the same condition. So if you remember these points, double provision. One in deposits exception for private company. One more is giving financial assistance to employees. Okay. So what is this point? Look at this. If my company's share capital is, let's say 10 and borrowings is 30. Assume everything in crores. Now, what is the provision saying? Your borrowings 30 should not exceed 2 times the paid up share capital. What is 2 times paid up share capital? Or 50 crores, whichever is. What is that? Then you can give how much ever deposits you want. Here, my limit is, but I already have borrowings of. That means you can give deposits of only 100%. Now look at this. Again, I will put one more table. Equity share capital 200. Borrowings 40 crores. What is the limit? Your borrowing should not exceed 2 times paid up share capital, which is 400 or 50 crores, whichever is. So 50 versus 40, it's less than 50. So you can proceed for issuing deposits more than 100%. That means, in other words, I can say if my share capital is more than 25, my borrowing limit is 50. Because if share capital becomes 26 crores, double is, it's 52 or 50, whichever is. So in simple words, if we had to mention, borrowing should not cross 50 crores. Then you, or 2 times the paid up share capital. Are you following, guys? This you don't have to memorize like that. It will come as an application question. They will give numbers. Are you following, guys? Other limit to remember. So these are the key provisions in deposit chapter. Are you following, guys? All of you with me? Hello? Okay. Then there are some miscellaneous concepts in deposit chapter. These are the key provisions. Private company deposits maximum 100% from members. More than 100% if you satisfy either you are a startup or you are not default in annual return or financial statements, not a subsidiary or holding, or your borrowings is not exceeding 2 times paid up share capital or 50 crores, whichever is less. Are you following, guys? Okay. Then term of deposit 6 months to 36 months. Shorter period 3 months to 6 months. Percentage 10%. Following, guys. Now there are some common points, like if you pre-close the deposit, I'm just going to take, there are so many common points, I'll just take few key points. If you pre-close the deposit 6 months to 36 months, I'm going in. FD, if you go and close before 5 years, they will put charges. Like that, if you pre-close deposits, they will reduce 1% interest for the actual period. I kept deposit only for one year. Then for 1 year, I'm supposed to get 7. You closed earlier, reduce and give 1%. 6, whatever. Following, guys, clear. Next, the rate of interest that you pay for deposits should not exceed the rate given by RBI. If you don't follow procedures of this chapter, whatever we saw, or if you don't refund on time, interest is penalty. 18 we saw here, and 127. That's it, 18%. Clear, guys? Then company should also file DPT3, return of deposits on a yearly basis before 30th of June every year. You have to file return of deposits. Are you following, guys? Clear? Then you need to create a charge on the deposits on the assets, but if it's deposits from public, 76, asset should be only tangible, because intangible assets value can fall. And if it is 76, you should also obtain credit rating from some credit rating association, CRISIL, CARE, all of that. Are you following, guys? These are some few common points. Apart from this, there are some other points, guys. This resolution, that resolution. Next, I will take up something called deposit trustee when I take debenture trustee. Okay, I will bring that in debenture chapter. With this, deposits comes to an end, but there is one more key point which I will teach you from the book. Okay. In exam, they either ask, in deposits, if you see only two questions, what we just now discussed, 73, 76, that limits, or they will ask whether is this a deposit, it's not a, only these two, 6 mark question can come. So let me go to deposits, page number. Yeah, okay. This I will show in the book so it gets over fast. Same thing, whatever book you are following, point is going to remain the same. I will run through these points. Look at the definition of deposit. They say deposit includes any receipt of money by a company by way of deposit, loan, or any other form. That means if I sell goods and receive money, it's a deposit, correct? Deposit includes any receipt of money by a company by way of deposit, loan, or any other form. If I sell goods, it's a deposit. This is like defining food means anything you can eat. So I will eat rubber, that's also food. I will eat pencil, that's also food. Then I am defining what is not a food. Rubber is not food, pencil is not food, sharpener is not food. I will write all that. So this definition is like that. So they have defined deposit includes however company gets money in any form. So therefore they have given a huge list of what is not a deposit. Before I go show that list, I will randomly take 5 points. You tell me if that's a deposit. Selling goods and getting money, is it deposit? Getting loan, is it deposit? For World Bank is giving money, is it deposit? Netflix subscription I paid, Netflix getting OTT, is it deposit? Are you following? Startup is getting funding, is it deposit? Startup getting funding, equity investment, deposit? No. These are the points which is there here. So quickly if you see, the first set of points is basically loan. All these 3 points are loan. Any loan from central government, state government, bank, financial institution, World Bank, whatever, international body, loan facility, intercorporate deposits, these are all not deposits. Because if it's deposit, you have to follow provisions in this chapter. Clear, guys? Next. Remember we just finished private placement and share issue. In share issue, the timeline was allot within 30 days, refund in. Private placement, allot within 60 days, refund in. From the 46th day and from the, this money will become a, up to this period, it's not a deposit. That's the next period. If it's not refunded within 15 days, from the next day it becomes a deposit. Are you following, guys? Next. What is key? I'm only focusing on key points. Any money received as debentures, is it deposit? No, it's debentures. Are you following, guys? Then, any money received from directors or relatives, it's not deposits because it's loan from directors. Then, this is important. Security deposit received from employees without interest and not exceeding is. For loophole, what I will do, I will hire all of you as employees. I will give you money and ask you to deposit in the company. If your salary is 6 lakhs per annum, can you invest 60 lakhs as deposit? That's what he's saying. So if your annual salary is up to 6 lakhs, is not a deposit, and that too should not have any interest. If you are depositing and I am paying you interest, then it is deposit. So security deposit from employees up to maximum annual salary without interest. Sometimes in some jobs they will ask you to pay 1 lakh deposit. That deposit is not a deposit as per this chapter. Are you following, guys? Same 1 lakh you paid with interest, then it becomes a deposit. This he will test with the 12 months. In other section, it's 6 months. Employees. Clear? Then amount held in trust is non-deposit. Leave all of that. Amount collected from mutual fund, SEBI, venture capital fund, all this is not deposit, which is key point again here. Startup company receiving more than 25 lakhs from a single person in a single tranche. One shot investor gave me 25 lakhs, more than 25 lakhs. Is it deposit? No. He gave me 5 lakhs. Is it deposit? Yes. And such money, why he gave? Received to be converted into equity shares or repayable within 10 years. Either he gave me loan or he gave me money to be converted to equity more than 25 lakhs. It's not a, you gave me only 10 lakhs. It becomes a, you gave me 1 crore, but you gave 20, 5 times. It becomes a deposit. Look at the wordings. More than 25 lakhs from a single person in a single tranche is not a deposit. Then chit fund receiving money is not deposit. Look at this. When you receive advance from customer, what's the entry? Customer is giving advance on sales. Entry, guys. Bank account debit to advance on Shri Mitai. Diwali is coming. You went and booked now 10 kgs. So you paid advance. Later, when he is selling the goods, what entry he will pass? Sales to. So this is the advance entry. This is the set off entry. The time gap between these two entries should be maximum 365 days. 365. If the time gap exceeds 365 days, then it becomes a deposit. That's what this point is. Trade advance received or apportioned within 365 days is not a deposit. Logic, why sir? I don't have time to tell you logic. For every provision there is a logic. Now we are focusing on exam. Okay. Same way, now if you are constructing house or you are buying a flat, you will give an advance. Then you will set off. There can I keep 365 days? Because house takes more time. Therefore, for immovable property, he is saying the period advance is as per terms of contract. Then security deposit for performance of contract of goods, okay. Advance received by any sectoral regulator for TRI or BCCI license, you will pay money. For using the 5G spectrum, you are paying money. That is not a deposit. Clear, guys? Now, do you know this Mint app, news app, News Mint, Hindu, Economic Times? Sometimes you have to pay money to use. Sir, why will I pay, sir? I am not reading free news itself. But some people will pay money to you read that news. That money which the newspaper is receiving is not a. Last question. For Netflix, can you pay yearly? So if you pay yearly, is it a deposit for Netflix? That is the next point. Any advance for subscription, OTT, any subscription for print or electronic media to be adjusted against the receipt. Hotstar, sometimes you can pay 3 years advance. He will set off monthly. That is not a deposit. Are you following, guys? Last one. Do you have to pay AMC for AC? Do you pay AMC for how long? 1 year or 2 years. Do you pay AMC for 5 years? Laptop warranty, how many years you will pay? 2 or? Such kind of AMC paid for any warranty or maintenance is not a deposit. if it's up to 5 years. Or any other general trade practice, whichever is lower, 5 years or general trade practice. These 14 points, you need not mug up, but you should know the key provisions. Startup means 25 lakhs in single person, single tranche. Employee security deposit up to 1 year. Are you following, guys? And one more key point here, point 7. Promoter's loan by way of unsecured loan due to stipulation imposed by lending institution until such loan is repaid. Beautiful point. They can test. Company, let's say Adani is famous for what? Taking loans. Okay. Adani wanted 10,000 crores from SBI. SBI told, I'll give you 10,000 crores. The director, Mr. Adani, you give 100 crores loan. Then only I'll give 10,000 crores. So this also is not a deposit. This also is not a. Once this is repaid, this should also be. Otherwise, this becomes a deposit. That's it. That's the point. Are you following, guys? With this, we are done with what chapter? What section over here is important for me? That's it. And what is not a deposit? It's basically rule 21C. You don't remember also, it's fine. In exam, they will ask only 2 questions from deposit. Either 73N or what is not a deposit. In this procedures, go have a look. There are some miscellaneous concepts, small points, like some procedures, survivor, joint. How many people can be deposit holders? Maximum 3. Joint deposit holders up to 3. You can't have more than 3 deposit holders. Can I have 5 deposit holders? No, only up to 3. Are you following, guys? Understanding? Then some other points. Circular in form of advertisement. This for deposit I give advertisement. When is it valid till? I'll quickly show that also, because that also can be an exam question. Last one. Yeah. For getting deposit, it's not like share. Do you go to bank and put deposit on a specific day? You can go whenever you want. Same way you can go to Bajaj Finance and put whenever you want the deposit. For that, the prospectus, in other words, the advertisement given for inviting deposits is valid. This is important. Earlier of 6 months from the end of financial year or date of AGM where the financial statements are held or where no AGM is held, last day on which AGM is held. In simple words, he's trying to say it's valid till date of AGM, because AGM should be held within 6 months or date of AGM or where no AGM, last day. In simple words, whichever is earlier. Are you following, guys? Clear? With this, deposit chapter comes to an end. Now let's focus on how to present answer in exam. You may be knowing, but just giving clarity, telling you what are the things you should not be doing unnecessarily. Okay. And again, last thing, not that important for exam, but deposit chapter not applicable to a bank, NBFC, housing finance company, because bank's main business is giving deposits. Fine. So again, let's revise section numbers once, guys. Section 1, Companies Act, 285, 114, resolutions, 117, intimation to ROC within 30 days in form MGT, 14, 88, 102, explanatory statement, 134, both report, 92, annual return, 137, financial statements, 25, deemed prospectus, 50, 100, EGM. So EGM 196, 123, declaration of dividend, 123 subsection 3, 123 rule 3 rules, 124 unpaid dividend, 125, 126, 127, if 126 is abeyance, 62 is, 63 is, if 124 is unpaid dividend account, 42 is private placement. Now we saw from deposits, 73, deposits from 76. That's it. 73 is deposits from members, 73 deposits from public. That's it. Following guys, deposit chapter comes to an end. Now we'll go for one more hour guys till 1:30. 1:30 we'll go. Now follow presentation in exam. I'll finish presentation in exam, then buyback, reduction, debentures, go for break. So we'll be done with till charge, this deposit's over, then charges, meetings, books of accounts, auditors, one more session, other loss. Fine. Follow guys. How do you present an exam? You already know. I just want to spend few minutes since it's exam oriented. You all know that first you have to write the facts, then provisions, then analysis and. But from whatever answers I have seen, the facts should be only 2 to 3 lines. Because for facts, marks is, if the question is half a page, don't write half a page of facts. Are you following guys? You can't write so much facts, it doesn't make any sense. Just write crisp, what are they concluding? They are saying facts is big paragraph. What is the crux? Can company do this? They will give so many things and say, can company do buyback? This will all happen. Don't write all the dates, limits and all in the facts. Just write, company wants to do a buyback. This is what happened. Can the company do it? That's it. What is the statement? Provision, just write the relevant provision without using any questions or names from the question. Don't write too many provisions. If they're writing about, asking about private company, limit of 200, don't write what is a public company. It's a related point. No. Are you following guys? Which provision are, see, your conclusion is depending on which concept. That should be my provision. Are you following guys? For example, in deposits, if they're asking about how much deposits can a private company raise, if the question is regarding that, you will write only regarding that 100% rule and the exceptions under that. Don't write eligible company, 35, 25, government eligible company, duration of deposit 6 months to 36 months. He didn't ask. Your question is revolving which provision, write only that in detail. That you write in crisp and detail. Sometimes students, he'll keep writing. He'll change the sentence to make it look bigger. No. Examiner knows all of that. If you can write, he's seeing hundreds of papers. He won't know. It has to be crisp and clean. Analysis. For analysis, you connect the facts and provision and write an analysis. For example, this company, private company, its paid up share capital is so much. So the 100% of that is so much. Therefore, it can raise so much deposits. However, this company is not a holding in subsidiary. It is not having so many borrowing. Therefore, it can raise more than 100%. Now come to the question. As in the question, company wants to raise 700 crores of deposit. Therefore, they can proceed. Conclusion is one line. Question, what is asking? Possible, not possible. Yes or no. Conclusion, I will write that in the conclusion. Yes, possible, not possible. Are you following guys? Hello. That's provision. We will do that presentation today. End of the day, I will pick up any one question, ask you to write the answer, or before lunch itself I will give you. Write whenever you can, after break or after that. Then I will evaluate now itself here and give you individual feedbacks for those who are in the class here. Those who are in online, I can give you a link in the description of this video. You can upload the answer, just one answer in that Google form. I will try to give you the feedback, or you can also WhatsApp, but if 100 people WhatsApp, it will be hard. So that's about it. I'll give the link, but here you guys, I can, if you already have the answer, show it. Okay, fine. Let's proceed to the next set of sections. I'll take something light. I know it's getting close to lunch. So I'll take something light, easy, and you can see I don't want to take reduction, buyback, heavy provisions. I'll take charges, light, we can finish in 20 minutes. Okay. Follow, guys. Are you all with me? Hello. See, post lunch also we will have 2 sessions. One short session after lunch, again one small break, then till evening. Whoever can stay can stay. If you have to go, you can go home. Not a big deal. Okay. All of you here, guys. Hello. I have kept a cutoff for me. Personally, 7 is what I want to wind up. 7 p.m. I told 6, but let's say it goes till 7. See, if I have to keep doing, I can take till 9 also. I'll keep 7 as cutoff for me. The class will end at 7, irrespective of how much we finish. Before 7, you have to leave at 4, 5, 6, far away. You can leave. Not a big deal. Okay. Following, guys. Now, charge. Follow. Once a charge is registered or once a loan is taken, the charge should be registered within 30 days. What is charge first of all? Lien on assets. Basically, there is a misconception about charge. Charge is not a loan. Let's say there is a pledge, mortgage, hypothecation. You should know the difference for all. Pledge is giving goods, giving the auto and taking loan. Auto man giving the auto and taking loan. Hypothecation is giving the RC book of auto and taking the loan. Because in hypothecation, if I give the auto and take the loan, how I will repay the loan? Are you following? So pledge is mainly like giving the gold ring, taking loan. Same thing, hypothecation also is same thing. But the possession of the asset is with me. I just give the title deeds. Mortgage is for immovable property. For immovable property, I will give what, guys? Title deeds. I can't give the asset, I will take loan. So whenever a company is creating a pledge or a mortgage or a hypothecation or creating any security on any loan, you have to create a charge. Means basically, let's say Vijay Mallya has taken loan from SBI 500 crores for which he has given security of his flight. This loan of 500 is secured with a charge of with SBI. This will be informed to. So tomorrow Vijay Mallya, he has not repaid the loan. SBI will become in charge of these flights. That's the word of charge. That is informed to ROC. Why informed to ROC? Vijay Mallya, what he will do? He will take 500 crores loan from SBI. Tomorrow he will go to HDFC Bank, take another 100 crores and give the same flight as security. Same papers, take Xerox and give color Xerox. How will HDFC know that Vijay Mallya already took loan from SBI? Now you all know. Those days how you will know? That's why we create a charge with ROC. So HDFC before giving loan to Vijay Mallya will go and check if there is some other secured loan. That's the concept of charge. Got it? I am being quick. Are you able to understand? So once a loan is taken, charge should be registered within. If you fail to register in 30 days, you have another 30 plus 30. 30 with additional fees. That also you fail, then I'll give you more 60 with a fees called ad valorem fees. Ad valorem fees means, I don't know, sir, I just mugged up, it's there like that, I don't know what is it. Ad valorem fees means it's a percentage of the value of asset or loan. Clear, guys? For exam, what remember? Section 77 to 87 is charge chapter. 77 says charge should be registered by, in our example, Vijay Mallya. He only took the loan, so he should register within. If he fails, again 30 days with additional fee. That also fails, 60 days. Now let's look at this example. Vijay Mallya took loan from SBI on, let's say, 9th October 23 today for 100 crores. The charge is registered with ROC on 12th October 23. Vijay Mallya also took a loan from, let's say, ICICI Bank, 50 crores for the same asset on 10th October 23. After this, correct? But this charge is registered on 11th October 23. As usual, Vijay Mallya took the flight and left to UK. Now, this asset, SBI can take first, ICICI will take first. ICICI, I don't care about the date of loan is irrelevant. What matters for me is the date of registration of charge. That only is deemed to be from the date on which security is public and valid, effective. Clear, guys? So I might have taken the loan in 2000 but registered in 2023. Then it's called a secured asset only from this day. That's why it's important to register. But this risk is for whom? Bank ka Vijay Mallya. So section 77, what I just discussed is, who registers the charge first has the first power. Register within 30 days. Other additional fees, 30 days. Advance fee, 60 days. But if you fail, 78, next section says, if the company fails to register the charge, then charge holder, bank itself can register the charge. Are you following, guys? Hello? So again, let me repeat. Register within 30 days, additional fee 30, again advance fee 60. If the company who took the loan fails to register, then charge holder can register. Within when? No time. After that, I can register. So 77 is for company, 78 is charge holder will register. Basically, they will give him time of 300 days. Whenever he fails, I can do whenever he fails. Clear, guys? 79 talks about modification of charge. Very simple. Earlier, I gave flight as security. Now I am changing to something else. Are you following, guys? If I am changing the asset given, for example, modification, like change in interest rate, modifying the terms and conditions of existing charge, increasing or decreasing limits except working capital loans. Why except working capital loans? Working capital loans limit will keep changing always. Then I can't keep filing always. Release of charge, releasing some assets, or change in repayment schedule. Change in interest rate means between you and me. When bank rate changes, it changes for everybody, not that. So whenever there is a modification, you again have to inform ROC within same timeline as 77. Inform within 30 days, fail again. 30 days, again fail. 60 days. Are you following, guys? Hello? Okay. Then modification is done by creating a, that means I am here, who has first right? SBI. Second right? ICICI. Now I am making an agreement. Both of you share proportionately and equally. So changing the right from SBI first to ICICI next to both of you equal, proportionate is called modifying by creating a pari passu. That also has to be intimated to ROC within 30. If you fail, 30, again 60. So we finished 3 sections. 77 is time limit before we should register the charge. Loudly, guys. 78. Charge holder will register. 79. Modification of charge. Time limit is same as 80. Date of notice. That means this only came in May 23. 5 marks question. What he asked? Very simple. Now, in the same question, ICICI Bank and SBI, can tomorrow ICICI Bank cry and tell, I did not know there was a loan? Or can SBI tell, I did not know there was already existing loan taken 2 years back? No. it is not the duty of Vijay Mallya to disclose that. Date of notice of charge, section 880 takes the principle of doctrine of constructive notice. From the date it is registered, it is deemed that everybody transacting with the company is aware about the charge. It's not my duty. It's like Charan got married. Then after marrying, that girl told, this is the third marriage. Why didn't you tell me? Then Charan is saying, in matrimony site, I already mentioned, you didn't see her. So this is section 80, date of notice. Charan, example. Done. Following, guys. Clear? He's still unmarried, guys. I'm just taking example. Okay. Done. This is date of notice. Section 80. 81 is not there. So look at the section. 77, registration. So far in exam he asked only 77, 79, 80. Nothing else in this chapter has been majorly tested. 77, 30 days. 30 days, 60 days. 78, if company fails, charge holder, bank. 79, modification. In all these scenarios of modification, you will intimate here what to remember. Changing the bank rate is not a modifying. Changing limits is yes modification, but not for working capital loans, creating pari passu, all of that. Clear, guys? Then 80 is date of notice. 81 we don't have. 82 and 83. Very simple. Once you repay the loan, what should you do? Once Charan gets married, what he will do? Will he still keep the profile and matrimony? He will remove it. Why? Purpose solved. So, that means how he should remove? Will the website know that Charan is married and they will remove it? He has to log in and deactivate the account or delete the account, whatever, I never used it. Okay. Now, follow, guys. So, same way when here Vijay Mallya repays the loan, he has to go and inform ROC that I have repaid the loan. Will ROC immediately cancel? They will check with SBI or ICICI bank, get the confirmation, then close the charge. That is called satisfaction of charge. Now you tell me, guys, do you think if you repay, will you be bothered to go and remove the profile? My purpose is solved. Why will I intimate ROC? Generally people, when Charan got married, he is not bothered about the profile. Why will he go log in? It's saying password forgot. Will you reset? He will ignore, leave it. Correct? So, same way when someone repays the loan, Vijay Mallya also repaid, his purpose solved. SBI got the money, his purpose solved. They will generally not inform ROC. So, 83 is saying, if ROC comes to know that loan is repaid in some source and you are not informed, ROC to record satisfaction of charge. But here ROC's ego will be affected. Why didn't you tell me? So ROC will not ask you. First they will cancel the charge and then inform you. I cancelled, that's it. But here you have to inform the ROC. Look at the timelines. Again, this chapter fully, timelines is 30 days. Okay. So 82, if you look at the timeline, look at this. Once the amount is paid, within 30 days, you have to intimate. See, I'll draw it simple here. ROC, either the company or the bank, but mainly company. Intimate ROC within. Then ROC will send a letter to the charge holder company. Company has to give confirmation or not within. Then if they receive a reply, they will act on it. If no reply is received, ROC will proceed to go and cancel and satisfy the charge. So that's about it. Within 30 days, wait for reply. No reply or no objection in 14 days, ROC will record satisfaction. Objection received, then proceed based on objection. Then they are saying, since we will not immediately do this, whenever you book Ola, Swiggy, do you give rating immediately? No. Only if it comes as pop-up. Only if you give rating you can close. Then forcefully you will give. So here 30 days, Vijay Mallya will not bother to inform in 30 days. So the law says instead of 30, we will extend this up to 300 days to intimate ROC. After 300 days also you did not intimate, ROC is proceeding to section 83 and it says, I will record satisfaction by myself. You never told me, stupid fellow, 300 days I waited. You never informed. So I will cancel the charge by myself and then I will inform you within. I will cancel and then inform you. Not inform and cancel. Are you following? This is trying to be arrogant. This section is arrogant. You are not informing, so I will cancel and then inform. Then if bank comes and tells, hey, why you cancelled? Then we will reopen. Are you following, guys? When ROC will cancel, if it knows that debt has been paid or asset has been released or property ceased to be property of the company, company sold that asset to somebody else. Are you following, guys? Then the charge will be cancelled. Are you following this? Which section? 82 and 83. 82 is satisfaction of charge. 83 is ROC to intimate satisfaction. Last three sections. 84, 85, 86, 87. Simple. 86 is, I will not be taking much. 85, not in syllabus. 87 is simple, guys. This full, okay, I'll come to 87 last. 84, mark it as important for the exam. What is 84? Whenever a company, see, charge means not, it's a loan. So if Vijay Mallya is not paying the money, SBI will appoint whom? Some liquidator, correct? SBI will appoint liquidator. So now that asset is losing, SBI is losing the power. Who is gaining power? Liquidator. So whenever liquidator is appointed, inform ROC again, come on guys, within. That's it. That's it, 84 over. 84 says, whenever, that's a small section guys. Whenever a liquidator, here we don't call him liquidator, we call him official receiver or manager. Whenever official receiver or manager is appointed by court or court order, just intimate ROC in. So in this chapter in exam, if you forget time limit, write 30 days. If you forget. Don't write whatever 30 days. If you forget where some place 14, 300 is coming. You don't remember means you write 30. Section 77 also, file within 30 days. Additional fee, 30 plus 30, 60 days. Are you following guys? Clear? Then they are saying, so basically this full chapter is about time limits. 77, 30, 30, 60. 78, company register. 79, again 30, 30, 60. 80, date of notice. 81, not there. 82, intimate in 30 or 300 days. Wait for objection in 14 days. 83, 30 days. 84, 30 days. 85, not there. Penalty. 87 is saying, in all these sections, I did not follow time limit. Ad valorem fee is a percentage of loan. I did not register charge for 3 years. So I have to pay a fees of 2 lakhs. So I will go to ROC and beg him. Central government, I will go and beg. Sorry. By mistake, I forgot to register. Please excuse me. Central government says, okay, fine. What will you give me? Documents, reasonable justification. Then, condonation of delay. Whenever there is a delay in this chapter, I can request central government, then they will condone the delay. If it is for any just and equitable reasons. Are you following guys? Or if there is any mistake, they will do rectification of the charge. Spelling mistake, loan amount, property changes. Are you following guys? Clear? And these charge documents you are filing should be signed by director, bank, all of them. Clear? With this we are done with deposits and charges. Quickly we finish both guys. Are you following? Hello, is the whole thing being useful? Are you revising guys? Focusing on key points. So 73 deposits from members, 76 deposits from public. In charge chapter, remember mainly 77, 30, 30, 60. For your exam, 84. Inform liquidate, quote in 30 days. See, other sections I can focus, but for want of time, numbers I'm saying. Okay. Done, guys. So again, let's revise section numbers once. I'm going to do it multiple times so it gets into your subconscious today. Fine. Section 285. You have to be very loud, guys. Wake up others. 285. 114. 117. Inform ROC within 30 days. Online students, come on. Repeat. Next. 102. Explanatory statement. 88. Register of members. 134. Board report. 92. Annual return. 137. 25. Team prospectus. 50. 100. If 100 is EGM. 96 is AGM. 123. Declaration of dividend. 123 subsection 3. 123 rule 3. 124. 125. 126. 127. Punishment. 128. Yet to see. Okay. Yet to see 127. Then 126. Abeyance. So 62. 63. 124. Unpaid dividend account. So 42. Private placement. 73. Deposits from members. 76. Deposits from public. 77. Register of charge. 77. Register of charge. 79. Modification. 84. Official receiver. Are you following, guys? These are the sections we saw. So far, we are still going to see a few more. Now, just a short last half an hour, guys. What I'll do now, I will, before lunch break, I will put a question here for you to write the answer. I will see some answers in lunch break if you write, or evening we'll have one more short break, or after class. Okay, whatever possible I can see today. If you are writing, giving feedback, following, guys. Hello, just one question. We can do that since you are here in offline class throughout the day. Now, let me take the last section before we go for break. We basically have share capital reduction, buyback, debentures, and that further issue. Ideally, I wanted to finish all of that, but we can do it. We can do it. Let me focus on debentures. 71, because this will help with deposits also. Mainly, I am going to focus on the concept of trustee and the related provisions. Just 15-20 minutes, that's it. Following, guys. Okay. Fine. Debentures or deposits is a case where we have a company and we have those debenture holders or deposit holders. These people are so many people, public at large. Hello. If they have any issue, they will reach out to the company. But the problem here is, if everybody comes to company together, it will become a issue. It will become, it will be a lot of, everybody will run together and come. So, I'm going to create an intermediary. See, I'm taking sections or topics first that you don't study. Because I'm sure everybody studied meetings, books of accounts, auditors. Anybody skip these topics? No. How many of you skipped charge? Deposits, incorporation. That's why I am doing that first. At least you remember a few things. Because meetings, books of accounts, auditors, I can run through. Everybody is strong in that. Because that is what everybody studies. So the marathon, I am keeping all those to later. So post lunch, I am going to jump to other laws. Other laws. And again come back to this. Or we will see. See, to finish everything, I might have to go post 7. But I'll see. Let's finish as much possible. Okay. 7 is the cutoff, guys. Okay. Fine. So there is an intermediary called debenture or deposit trustee. Debenture or deposit trustee. Are you following, guys? Are you all with me? Hello. So here, who is this deposit or debenture trustee is there for both deposits and debentures. So we are going to do a comparative study here. This is the main provision. See, in debentures, let me finish from key provisions first. Can I issue convertible debentures? I have to pass what resolution? Because they are going to be converted to equity shares. So for convertible debentures, I have to pass special resolution. Clear? Fine. Okay. So now, follow, guys. Yeah. For debentures, convertible debentures, pass a special resolution. If it's debentures from public, you will create a security, therefore you will create a charge. I am focusing on the concept of debenture trustee, deposit trustee. In both cases, I have to create something called DRR. In group 1 accounts also we studied debenture redemption reserve. In deposit it's called deposit redemption reserve. There are some percentage. Yeah, deposit repayment. Correct. Sorry. Repayment reserve. Debenture trustee and deposit trustee. Debenture trustee is not applicable if the number of debenture holders are less than 500. No need to have debenture trustee. No such provision in deposit. Okay. In debenture trust deed, agreement between the company, debenture trustee and debenture holders should be made after issue. Here, before issue. Logic is very simple. In debentures, who are the debenture holders? I know only after the issue. So I make agreement. In deposit, I can't wait for after issue because you can make deposits every day. See, debentures have offer opening, offer closing. In that time only you can buy debentures. But in deposits, anytime you can buy. Correct? So here it's made before. What are the timelines, guys? See and tell me. In debenture trustee, the debenture trust deed should be made within how many days after issue? 7 or 3 months?
3 months.
Within 3 months, correct? So within 3 months from closure. So here the trustee deposit should be made within
3 months.
Deposit. 1 second, let me just cross check. 7 days. 7 days before the issue. 7 days before issue. I know 3 and 7, just want to know which goes where. Clear, guys? Following. Look at the logic. Debenture trustee, after 3 months of issue, you have to make the debenture trust deed. Here, debenture trust deed should be made 7 days before the issue. Are you following, guys? Hello? Who is this person? Debenture trustee or deposit trustee? Who is he? Who is he? Somebody who takes and protects the interest of deposit holders or debenture holders. Can he be a debenture holder? Can he be a bank who has given loan? He has to be an independent person who is not related to the company in any way. Otherwise, if existing banker is debenture or deposit trustee, what will happen? He will be more thinking about his money. Following, guys, clear? That's it. Deposit trustee. These are key points. Now, in debenture trustee, we have some limits. 3/4 in value, 1/10 of debenture holders. Then again we have simple majority. So debentures, okay, simple majority, and again that's it. We can remove the last one, it repeats twice, so I can write here itself. These three limits you have to remove. Remember, for debenture trustee, simple majority, that means simple majority in number, not value. This is value, this also is value, this is number. What number? Can I have multiple debenture trustees? Yes. 3 banks, 4 banks. I can have more than one. That's optional. Minimum is 1. Whenever debenture trustee leaves the office, casual vacancy or debenture trustee dies, leads to what? Casual. Such a vacancy should be filled by a simple majority of numbers electing the new person. Are you following, guys? So this is in case of clear casual vacancy. In case of value 1/10, what is this? In EGM or AGM, in EGM, if you want to call an EGM, how many members should request for EGM? 1/10 of members should request for EGM. So here also, if you want to call for a meeting of debenture holders, 1/10 of value should request for a meeting. Are you following, guys? Hello? Clear? Next, what is 3/4 in value? 2 things. Under that you have 2 things. If you want to pass any resolution relating to debenture holders, value is 3/4. Or now, what is the work of debenture trustee? To take care of the interest of the debenture holders. Debenture trustee is saying, I was very genuine. I was sitting in the office. Whatever news I got, I told you. Still, something happened. The company directors took the flight and left with the money. So, all the debenture holders will catch whom? Debenture trustee. So, you all came to catch me. I'm a debenture trustee. I'm saying, before you fight, sit down. Or listen to me for 5 minutes. I did all this. I was genuine. So, if 3/4 of you believe that I did a good job, then I am exempt from damages. See, basically, if I was negligent, I did not do the work properly, I am liable for my breach of duty. But if something goes wrong, company is not repaying the liability, interest, debenture trustee is not liable if 3/4 of the debenture holders pass a resolution saying, I am exempt. Because I did my job. Go ask company. Are you following? That's the point. See. However, see, where the debenture trustee enters into any contract, leave that if 3/4 of debenture holders agree in value, he shall be exempt from above. Above what? Where the debenture trustee is guilty of trust or fails to show care expected from him, he shall be liable for damages. Now, look at, let's say, all of you are the debenture holders. I am the debenture trustee. Company is Adani. With Adani, I entered agreement that you take the money and run away. I am not liable. Such an agreement between me and Adani is void. That is what was this point, where debenture trustee enters into any contract with a company to exempt him from such a contract will be void. And whenever debenture holder feels that something wrong is happening in company, what should I do? Don't inform debenture holders, they will come running. First inform tribunal. So whenever you feel that assets are not enough for discharging liability, he should apply to the, then tribunal will pass an order asking the company not to incur any further liability. Are you following, guys? That's it. And then you remember the other points also. What are the other points? Up to 500, no need debenture trustee, create within 3 months of the issue. Clear, guys? So this is the summary of the values you need to remember. Lastly, coming back to the comparison here, here it is before issue, after issue, after issue, before issue, 7 days. Appoint and make the debenture trustee. In both debenture trustee and deposit trustee, we have a provision of who cannot be a debenture trustee. Like how, who cannot be an auditor? Disqualification of auditor, disqualification of debenture or deposit trustee, same answer. Both. Here, debenture trustee or deposit trustee, only 1 point changes. Only one. Which one? I'll show you the difference. So basically, the relationship 2% will not be there. So who cannot be debenture trustee or deposit trustee? Can be a case study question, never tested, and a beautiful concept to test. The percentage is what I just showed you here, never tested, can be tested. Following, guys? Hello? So who cannot be debenture trustee? Beneficially holds shares in a company. Shareholder cannot be debenture trustee. Promoter, director, KMP or any other officer of subsidiary or holding associate cannot be. Relative of the above, he is indebted to the company, holding subsidiary or associate, given loan to the company, or last one, gave guarantee in respect of above loans, cannot be debenture trustee. All these points are same for both. Only 1 point is different. Pecuniary relationship with the company amounting to 2% or more of its gross turnover or total income or 50 lakhs, whichever is less, during the immediately preceding 2 years. What is this, sir? I am the customer of the company. Hyundai, I want to be debenture trustee of Hyundai, but last year I purchased 10,000 cars from Hyundai. So the transaction I have with them is, or leave 10,000 cars, I purchased 10 cars from Hyundai. So the transaction I have with them is more than 50 lakhs in last 2 years. So I can't be a debenture trustee. I am a regular, I go for regular visits to Apollo. My bill with Apollo is 75 lakhs in 2 years. You can't be a debenture trustee. The only difference is this point is not there in there. What is there? Any material. Very simple. Who cannot be? Yeah, same point. Everything same. Who cannot be deposit trustee? They did not define the limit, guys. That is defined as 2% of turnover or income or 50 lakhs, whichever is less. Here, no limit. Any material interest. That's it. Rest everything is same. Are you following, guys? That's it. So, with this, we are done with what, guys? Debentures, deposits, charges. Are you following? Hello? So, we still have 66 reduction of share capital, 68 buyback, 69 CRR, 70 prohibition of buyback left. Then deposit chapter over. Share capital also, charge also is over. We have 88 to 122 meetings. Dividend is completed. 123 to is over. Then we have 128 to 138 books of accounts, and lastly we can see auditors, because everybody knows that very well. 139 to 148. How to remember one more section? You are all in which course? See, no offense to anybody, guys. You are all in which course now? CA course. Why you chose CA? Okay, given a choice, CA or CMA, only one you can pick. Which you will pick? CA. Why? CMA is your second choice. That's your last choice compared to CA. No offense to anybody. The last section in Companies Act for our syllabus 148 is cost audit. Last section. 148 is what, guys? Cost audit. So 148 is cost audit. Never tested in any exam. Why? Ego clash between CA institute and CMA. They are fighting. So they were never tested in exam. Whether it will come, I don't know, guys. No offense to any CMA students. I am just giving example to understand the remember section numbers. Let's take another 3 section numbers. We'll go till 1:30, guys. Come on. Marathon day. Of course, it's going to be stressful. Full day. So you have to push yourself. Come on. Now, let me leave meetings chapter. Meetings I'll keep for last. I will spend 45 minutes covering core of meeting. Now again section numbers. Cost audit is which section? He will audit what? Cost audit records. Basically, he will audit books of accounts. So books of accounts is 128. Cost auditor is auditing books of accounts. 138. Internal auditor will audit books of accounts. So 128 is books of accounts. This books of accounts, internal audit, 138, 148, cost audit. So 128, 138, 148. Are you following, guys? What's 128 again? Books of accounts. What's 138? What's 148? Are you following, guys? Easy. Again 128. Books of accounts. Books of accounts are audited by internal auditor. 138. That same books are audited by cost auditor. 148. Following, guys. Now for the next 10 minutes, till 1:30 we'll go, guys. 1:30 max. I'll stop there. Okay. Let me go to books of accounts now. Meetings I will keep it for later, because 96, 100 AGM, 100 to 110 meetings I can quickly run through. Okay. And you all know, you're experts in meetings chapter. We will do it. Now books of accounts. 128. Following, guys. Before that, post lunch, do you want continue Companies Act, finish and go to other laws, or go to other laws? How many of you other laws? How many of you Companies Act? Both we will do. Okay, fine. I will do other laws because you will skip interpretation of statutes, General Clause Act. So at least I will tell you what is important. At least that you study and go. Okay. So post lunch, but don't eat heavy lunch, guys. That too, other laws post lunch. Okay. Fine. 128 talks about books of accounts. Books of accounts includes all your cost records, what sales book, cash book, this book. Let me finish key concepts. Books of accounts should be kept where? Can I keep somewhere else? Yes. Anywhere else in? Can the shareholder inspect books of accounts? No. Otherwise, Ambani, if I'm a shareholder of Reliance, I'll go to Ambani office and tell, why you passed this journal? Okay. So, shareholder cannot inspect books. Therefore, books of accounts should be kept in registered office, but I can keep anywhere else in. Think logically. Those days, books of accounts are so huge. It used to be go down. Then I have to keep it somewhere else only. If you keep somewhere else, what resolution? Board. No need member resolution, because member is not having power to inspect. Logic. So board resolution, keep anywhere else in India, inform ROC in 7 days. Normally 30. Here 7. So this overrides that section. Clear, guys? So 128 talks about books of accounts. Where to keep it? Registered office. Can I keep somewhere else? Yes. What resolution? Board resolution. Inform ROC in 7 days. Recording students, repeat with me. Next. Who can inspect books of accounts then? Board of. Can board of directors inspect? Yes. Can the director appoint agent to inspect? Yes. Imagine Apollo Hospital. Pratap Reddy is the CEO. He won't understand what's cash flow. I need to appoint an agent, CA, to inspect. Next. Can I inspect books of accounts of subsidiary? Yes. But the company has to pass board resolution. Can I appoint agent to inspect books of accounts of subsidiary? But if both the companies pass resolution and give consent, you can inspect. Following guys, next. Sometimes books of accounts are kept outside India. Foreign books of accounts. Then summary should be sent back to India within. Follow. There are two provisions here. Every 3 months, correct? Every 3 months, basically every quarter, foreign books of accounts should be sent back to the head office. Now I am the director. I am doing Q2 audit. Q2 I am doing review of Q1. That time I found something is wrong. Will I wait for 3 months to change for Q2? So whenever you request, director request, that should come within. So let me again repeat, 3 months and 15 days with respect to foreign books of accounts. Default, I am not requesting. So foreign books of accounts should come to India head office within 3 months. I am not requesting. So summary should be sent from head office to branch. Sorry, from branch to head office or foreign subsidiary to Indian holding once every 3 months, every quarter. But if I request for something specific, that should come within 15 days. Are you following guys? Then they are also saying books of accounts can be kept in electronic mode. Simple points, it should be accessible, it should be editable, it should be having good storage, backup, good security. I should be able to take printout. Then whoever edits I should take. Then amendments over here is the server should be in India. Because what if server is in US? Tomorrow India US fight. They will shut down the server, data lost. So server should be in India. Then what is the proof for that? So you should submit IP address to ROC every year. So server should be in India. That's the amendment. Clear guys? This books of accounts. So summarize quickly guys. Where should books of accounts be? ROC. Somewhere else? Yes. What resolution? Board resolution. Intimate ROC in. Foreign books of accounts send quarterly returns. 3 months. If I request, get return in 15 days. Next is simple section. 129 is preparation of. It's not financial statement. Financial statement is defined in 2 subsection 40. 129 is preparation of financial statements. Are you following guys? What are they saying in this section? Every company, holding company should prepare consolidation of all its subsidiaries. But what if holding is a foreign company, subsidiary 1 is an Indian company, subsidiary 2 also is Indian company. Then will this do consolidation? No, only the S1 will do. But H also is India, S1 also India, S2 also India. H is doing consolidation? Yes. Should S do it? No need. Then coming to financial year, they are simply telling if a company is incorporated on any day, financial year ends on 31st March. So if I am incorporated today, 9th October 23, my financial year ends on 31st March 24. But if I am incorporated on, let's say 1st Feb 23, my financial year will either end on 31st March 23 or 31st March at the option of the company. This option is available if the incorporation is done in the same financial year when it closes. That means 1st Jan 23, later if it incorporates, then close within the same year or go to the next year. And financial statement should be prepared in accordance with accounting standards, giving a true and fair view. If there is a deviation, disclose the deviation. That's all section 129. Then there are some points when consolidation is exempt. It's exempt when members give consent in writing. No need to do consolidation. If members give consent in writing, how many members? Check. How many members should give consent? No need consolidation. Members. Basically, there should be a majority of members give consent. No need to do what, guys? Consolidation. So 128 done. 129 done. 128 is what, guys? Loudly. Books of accounts. Last 5 minutes. Books of accounts. 129. Financial statement. Preparation of FS. 138. Internal audit. 148. Cost audit. Now we will do last 2 sections and go for break. 130. 131. Last 2 easy sections. 130. Some fraud. Someone did a fraud or mismanagement of business. Then you found out you are doing articleship. You are doing audit of some company. You found out full of fraud. So you filed an application to the... Who can apply to tribunal? Anybody. Can be SEBI, central government, RBI, article, 5th standard student. Anybody can make an application to the tribunal with sufficient evidence. If the tribunal feels the company's books are fraudulent or mismanaged, the books of accounts, basically financial statements, can be reopened for last 130. 131 is similar section. Voluntary revision. In this, no fraud. Financial statements under 129 or board's report under the director, board of directors itself, after filing the return under section 137, correct? We filed return 137. I realized something went wrong. So myself, in income tax you studied revised return, same thing. So after filing, you learned that financial statements there is some mistake or board's report there is some mistake. You can again reach out to tribunal. Tribunal will cross check with the income tax department and central government. Why? First you will file loss. Then you will change to profit and not pay tax. So tribunal will cross check with the income tax department and central government. Once they are satisfied, they will pass the order to reopen and revise books of last. But in 1 year you can do maximum once. One time you can do the revision. That's it. These are the 2 sections, 130 and 131. Let's revise quickly, guys. 130 talks about reopening of books of accounts in case of fraud or mismanagement. 131 talks about voluntary revision. Both cases you have to apply to tribunal. But in 130 you will apply to tribunal. Anybody will apply to tribunal. In 131, board will apply to tribunal by themselves. In 130, if tribunal feels something is wrong, then they will order for reopening of books for last if fraud or mismanaged. In 131, tribunal will cross check with income tax department and central government and pass an order for revision of books for the last 3 years. In last 3 years, you can revise only once. So 130 is reopening of financial statement books in case of fraud for last 8 years. This is voluntary revision. Are you following, guys? That's it. We'll revise section numbers one more time. Take it to your subconscious and then close. So one more time, guys. 114. Loudly, guys. Resolution, special or ordinary. 117. Filing to ROC in MGT 14. 88. 102. Explanatory statement. This time recording I will not tell. You are going to tell so loud here. Recording students should hear. 134. Next. 50. 25. 100. EGM. 96. Next. 92. Annual return. 137. Filing of financial statements. 128. 138. 148. Cost audit. 123. 123 subsection 3, 124 unpaid dividend, 42 private placement, 125 IEPF, 126 abeyance, 62 rights, 63 127 128 next section, 127 128 books of accounts, 138 148 73 deposits from members, 76 deposits from public, 77 duty to register the charge for our exam, 84 official receiver or liquidator. We have done all these sections. So now we'll go for a lunch break. Then fine guys, we'll come back. I will do little bit of Companies Act to close books of accounts, little bit, and then proceed to other laws. So yeah, next video recording, you can see the next part to continue these recordings for recording students. Okay.